Good morning, everyone, or good evening, or good afternoon. This is Tim Stout, and today's trading room is June 12th, and this is a news day. We have just had CPI news, and we're expecting the FOMC tonight, so it should be an eventful day, but the event number one is, of course, pre-market, and the event number two is tonight, 8 p.m. or 2 p.m. Eastern. And so we have about half an hour to get through some of the setups from yesterday and, of course, some of the news that just released. So let's look at that news first. Go to the Globex chart here, 5-minute bar. So you can see how we were traveling along Globex between 53.80 and 53.90. Small range, right? So overnight, small range, slightly bullish channel, but then in the European morning we started to become a little bit more bearish. And then just now the news, I'm looking at this bar to see that the bar before it, why don't I have my mouse thingy? Yeah, so the bar before it, this bar, set originally a double bottom, but then the news bar dipped briefly below some higher lows and then started to move up. Big bar. So it went all the way from 53.88 to 54.24. I mean, it's not as big as it used to be, right? We've had 100 points bars in this. And so they're getting smaller and smaller. And so CPI news is beginning to lose its impact on the market. Soon we'll be back to just like the regular 10-point and 5-point bars that CPI used to be before it became a thing. But it's still newsworthy. It's still smart to be out of the market when news hits, but it's definitely getting less. So we had a big bull bar and then followed by an inside bar. There are magnets here. That's why the price is stalling. That's also why the price is moving up there very quickly. On news like this, it basically vacuums up and then stalls at the next magnet. So there was probably a magnet here. That's why price was there for such a long time, and then there's a magnet here, and in between price just races up. In a 5-minute chart, this would happen much more gradually, but on a news event it can happen like this, right? And so if you're comparing the 5-minute chart Globex with this bar, you're basically looking at different time frames, right? That's another way to look at it. So FOMC bar tonight, I will compare, for example, the 50-minute chart with the 5-minute bars that are happening after the news event. And so if a news event like this happens, I'm typically looking at the 60-minute chart or the 50-minute chart to find my targets. So then if we look at the 60-minute chart, right, this is the 60-minute chart including overnight price action. We have a sideways trading range, roughly, this is the low maybe, right? So we went sideways for a number of days, pretty much this week and Friday, maybe Thursday, and we were hovering overnight around that resistance point, and now we've left that resistance point. And so the logical thing is to draw a measured move through that whole range, right? So that would be the low 53.29, the high would be 53.85, and so you end up at a measured move of 54.41, right? That is there. And so I'm looking at 54.41 this morning to find out if that could be an area where we're going to hit. If that is such an obvious measured move, such a big measured move, such a big target, then chances are that the next few hours we're going to oscillate around that measured move targets. So if we're now going to gravitate towards 54.41, then whatever we go above it will probably come back to 54.41, and whatever we go below it will probably gravitate back to 54.41 also. Now remember, this is a 60-minute chart, right? So even if we go 2-3 hours below it, we might take 2-3 hours to come back to it, that is still half a day of trading work, right? Or we might not reach it towards the end of the day to come back to it. But overall, on this time frame, on this hourly time frame, I think 54.41 is a target. Another obvious target was this range. So here, and that's 54.07. So if we start to bounce back, then we might miss the 540.41 and we'll come back to the 54.07.75. The next hour on the Globex chart is going to determine the follow-through. You can see how the follow-through is very marginal at the moment, but we still have 50 minutes left on this bar, so we'll see what the follow-through is going to be. I think we're going to hit 54.41 and then stall there, but we might get a pullback first. That's on the hourly chart. Can you do the same on the 50-minute chart? Yes, and you can do the same on the 50-minute chart, although we don't have big targets here, but we had a similar target yesterday, and you can see how that V-shape, right? So this was the sell-off at the open and then the recovery back up, and so that turned into 53.83 as a target, and we hit it on the 50-minute chart already 4 times at the end of the day, and then today already 4, 5, 6 bars. So it becomes a magnet for a bar or 10, and that is typically what you would expect. And so taking that back again to the hourly chart, if we're going to hit that measured move, expecting at least 10 bars around that measured move target 54.41. Just an audio check to be very sure. I did an audio check, but I want to just be sure that everybody can hear me well. Well, people say good morning, so I hope that they don't say good morning to a no voice. Okay, perfect. So let's see, on the 5-minute chart, we have some follow through. So this is probably going to get at least, well, this is the small second leg, right? So this is going to get at least 54.35. Let's say 10 points above 54.2850. It's 54.38.75. And so we're coming very close to that 54.41. Okay? So that is that. I put that here on the chart. So measured move target on the 60-minute chart. There's a chance that just gets hit on bar 1, right? And then it doesn't go much higher. We'll have to see around the open. But that is that news. So on the 60-minute chart, we're going, ooh, I didn't connect my, give me a moment. I need to put my juice in. There we go, juiced up. Started to see the screen come black and I was like, okay. Right, so we are juiced up. On the 50-minute chart overnight, you see this big news bar. Now, disappointing that this bar was an inside bar. Good follow through, but nevertheless an inside bar. It didn't go above the high, right? So it formed a double top on the 50-minute chart, and now it's going to get some follow through. So chances are that we are going to hit a trading range at the open soon. And what does this target say on the basis of this 50-minute bar? It says 54.4150, right? Exactly the same target, well, 2 ticks higher than our 60-minute measured move target. So looks to be a magnet right there. The market has to reach it. First, we could get a sell-off on the open and go there. I'm expecting that the early open, the early bars of the day will get us to 54.41. What are we doing on the weekly chart? So I kept my measured move in that I had in there last time I was presenting. And so I measured this wedge pullback that we had. And then when we broke out of the wedge pullback, we tested the high of the wedge, and then we started to come up. So I drew a measured move to 53.36.75, and we missed it on the first attempt, right, to 3 or 4 ticks, 3 or 4 points. Then we hit it on the second attempt, and then we circled around it for 4 bars on the weekly chart. So that's a good 20 days. And so that measured move is important, right? We're now trying to leave it behind and go further up, but I think that we're in the early stages of a top. A wedge pullback is often the final pullback, and if the trend continues, it's probably the last leg of the trend. A wedge pullback typically also sets a moving average gap bar, right? You need so many bars for a wedge pullback that chances are that you're going to be below the moving average. And in this case, we had a gap bar. I'm thinking that we're in the forming of a wedge top. So 3 legs. Let me draw my legs. So this is leg 1, small pullback, leg 2, bigger pullback, leg 3, somewhere here, somewhere here, somewhere here. But I'm thinking that this is a wedge stop. Now, wedge stop is not going to reverse down. It's probably going to go sideways for a while. But coming into the fall season, September, October, I do think that we're going to come down at least 5 to 10% maybe from the high. We don't know where the high is yet, but that's what I'm expecting. This little bar here is going to be a magnet for a pullback. And so that is currently at 51.60. The prices are going to change when we move to the September contract, right? Everything will be tilting up a little bit. And so the prices on the September contract will be different and will be higher. But this little gap here, I'm thinking that we're now in the trading range since 5,000, and that we're going to come back to all of this range. So all of these gaps here, we're probably going to close those gaps to the highs here of 51.50 and above. But no top yet, right? Strong third leg. This was strong. This was so strong that you could even think about a second leg that would be the size of this. But I do think that we're hitting important measured moves here, 53.36. Chances are that we're going sideways for a couple of months soon. On the daily chart, we had this strong sell-off. So we had 1 leg, 2 legs, 3 legs, or 2 nested legs. But this high was important for the bears. When the bulls broke it, they had to take 3 days to break out of it. It got tested again. Take this out, and now we're reversing up. The logical target would be a measured move then of that range to 55.30, right? And of course the numbers are going to change, so you need to measure it again on the September contract to see what the target will be. But I think this was a strong leg and a breakout and a test of its high. Continuation up, bulls will want to get to a measured move of 55.30. Now, of course, we had 2 legs down, and then we had a reversal. The bulls didn't really want to buy that reversal up. It hesitated, and then it went on the 5th of June. We hesitated 2 days, and then yesterday was first it went below, what was it, Monday? Then it reversed up, and it became a strong signal bar. And look at the follow through today already. So yesterday proved to be a very important bull signal bar. We're almost at 1-to-1, right? Stop below its low, entry at the close. 1-to-1 is, I didn't measure this exactly, but the low is at 53.3450. So 53.3425. And then the close is 53.84. So it comes to 54.3425, and that's where we're opening at the moment. So between 54.40 and 54.34, there are magnets. And so we're opening at those magnets. If today is going to be a big bull bar, we're going to go higher and we're going to go to 2R. But we're probably going to hang around 54.30, 54.40, and so that the bulls are going to take 1-to-1. All right, so that is the higher time frames. Looking at yesterday, so yesterday was interesting because of the big gap down. So we had a small pullback bull trend that started to go sideways into an exhaustive top, and then we had a wedge stop. And then yesterday just gapped down, formed a bear bar. Gap down and a strong bear bar closing on its low, or closing fairly on its low, is potential swing down, right? So you sell below bar 1 for swing down. You need at least 10 points for something, right? No, to buy bread, you need at least 10 points. So 53.48 was your entry 1 tick below bar 1. And then 10 points lower, you want 20 points, right? Let's start with that. So you want 20 points. So you want 53.28, right? But then when something happens, you can't get it. So you need to exit above 6, or you need to see that it's already a trading range and not a strong bear trend, and then you get something like this, about 10 points. Okay? So you can make a decision when you see bar 5. When you see bar 4, you want to hold. You want this to collapse down and go down another 200 points. But then when you see the micro double bottom in bar 5 being a doji closing with a small bear body, that is the end of a leg down, right? And so best to get out. If it goes below the double bottom, you can always sell again. So better to get out at the 5 close, put a stop below the micro double bottom 4-5 to get in again if it decides to continue. But a bar like this, you can see it as the dots behind the sentence, right? It's the end of something. It's probably a pause. But in this case, it actually reversed all the way up in a micro channel. There were no bear bars along the way, and certainly no bear bars that closed on its low where you could sell below. So actually, you never got trapped, right? So you sell below bar 1 or you sell below bar 2. When you see it come up all the way, you can still get out break even if you sold here. Or if you sold here, you can still get out break even on your shorts if you forgot to take profits. And then somewhere in here, you need to decide, am I going to buy? You can buy and then get out below a bear bar because of the bearishness. Or you can wait and see if we actually take out the high and then start buying the pullbacks. For example, here 31, 36, and the best buy of the day, I think, was 48 for continuation up. Now, you can also argue it's a bear trend. We have a gap down. There's a bear leg. So I'm going to sell pullbacks. Well, you could have sold 19, but very aggressive in the micro channel. So you probably need a second entry, which was 26. Stop somewhere up here, probably above yesterday's 79. And then when you see this happen, like you get good follow through 27, 28 is weak, 29 is a bull bar, 30 is a good bear bar, but 31 is a bull bar after a bear bar, and then you start to see a wedge bottom. You see all of this bullishness, and so you have to get out of short somewhere in here because your swing is not doing what you want it to do, right? So you exit. That frees your mind to take the long, and then when you see a new high or double top failing, buying above 48 was one of the best buys of the day. Of course, buying above 6 was also good. 7, 8, and 9 here. 7, 8, 9 was the bull bar here on the 15-minute chart. So if you buy above a bull bar on the 15-minute chart, you can also look to see what is the target on the 15-minute chart 1-to-1, and what is the target on the 15-minute chart 2-to-1, right? And 2-to-1 target on the 15-minute chart was 64.25. When we went too far above it, we've had to pull back to it before it continued. I think if this bear bar would have triggered, we would have come further down, but it didn't. And so the bulls had a chance to get higher, forming an outside update. So best sell, probably bar 1. Best buy, although very difficult. No, I think best buy is still 48. Difficult buy, but very good, was 6. Buying above 22 was probably good. Right? Even after 26 closed, you could still get out break even, or you could hold stop below here. And look, if you put your stop below, let's say here, and you buy above 22, right? So you put your stop below 6 or below 4 or 5 micro double bottom, and you buy one tick above a good-looking bull bar 22, you still get 1-to-1 at the end of the day, right? And that happens a lot. If you take a good buy and you put a good stop, you will get 1-to-1 at least, right? And so some bulls will do that, right? They'll put an entry here, they put their stop there, they put their exit order here or at the end of the day, and they'll just hang out in Walmart. And that was probably a good thing to do yesterday. You can also do the same here. So if you buy 48 and you want to put a stop below 35, you can do the same thing. You can actually exit here at 1-to-1 or exit here at 2-to-1 or exit at 20 points on a good swing long. The other thing was, of course, to look at all of this sideways. So you can roughly say here and here was a sideways pause. This was a breakout, a pullback and continuation. And so looking at a potential measured move of that range was probably a good thing, because when you can see when we reached that measured move target, we started to oscillate around it for at least 10 bars. Right? The same thing is what I'm expecting today on the 5440, right? That is such an important measured move that we're probably going to oscillate around those targets. So yeah, so that was yesterday. Let me know if you have any questions or comments about the price action from yesterday. I will keep an eye on the Discord. Just ping my name if you want me to see it, so that I just have to go through the posts where I'm tagged versus having to read everything in there. And today we also have FOMC, right? So 2 p.m. Eastern, we have the FOMC news release. Of course, have to be flat or right a couple of minutes before. And today, who's going to come after me? Is it Rose or is it Brad? Where can I? There it is. Rose is going to come when I finish. So we have about 5 minutes left. Let's take another look at the Globex chart. Okay, so we have that bull bar coming here. We had that hesitation and the follow through. Did that already reach 1-to-1? Not yet. 54.35. And did it already reach 10 points? 28.75 would be 38.75. No. So I still think we're going a little bit higher at the open, but you can see it's not a strong bull trend, right? And so on the news bar like this, 3 possible outcomes. It can form a strong bull trend and then become spike and channel. So in that case, you would expect something like this to happen, or something like this, so that it starts channeling up. It can form a sideways day. So it's at magnet, so it's just going to go sideways all day long. Or it can actually form a reversal and come back all the way here to the low of that bar. So that typically forms in, it starts as an endless pullback, right? So it starts to go this, but then progressively faster, it's going to come down. And then bulls will start to protect the stop, and then it's going to hit it, right? So that is how a typical endless pullback starts to convert into a reversal. And then you get this area where everybody decides that it's not working, and then we come down. Then the bulls start defending their higher low, right? And so you get a little bit of final flag behavior here, and then bang, it hits that low. And then either it's going to fall all the way down for a measured move, or it's just going to go sideways instead. If it happens, then it's going to go sideways more likely than further down. What I'm thinking is, though, that we're going to continue up a little bit more, right? And then we start to go probably sideways, come into a range closer and closer for FOMC. And then FOMC will probably take us back down, but let's see what happens there, right? Trade the chart in front of you, not what you think is going to happen. It's always good to have an idea about what might happen, and then with that idea, trade what you see in front of you. All right, 3 minutes left, so I'm going to give that to you to do some kumbaya and zen movements, and then I'll talk to you again when the market opens. Now, because the gap is so large, right, I'm going to look at the Globex chart as well. I see that there's a new higher low here, and then the other higher low is there. I'm going to look to see what happens at this higher low, because I think it's important for the bulls. Bulls on the Globex chart will have their stop there. And so on the RTH chart, with the gap so big, I'm going to look at that line to see if we go below that at the open. Now you could say, like, because the Globex high is so close and because most days go through the Globex high or Globex low, that it's an easy trade, right? You just buy market and then you go for the Globex high. But what in this case, it would be a day where we go to the Globex low, right? And then you lose a whole lot on that. And so just having these assumptions that we're probably going to go to the Globex high is in itself a bad trade or not a trade that you can take, because you would have to look at the risk as well. And then there could be a day that does neither, right? It doesn't go above Globex high or Globex low. And with such a big range, that is actually likely. So there's nothing to do with statistics. You need to have the pattern and you need to have the signal bars before you can enter a trade based on something like that. Unless you have 10,000 days of history and you know exactly what your risk reward is, then you can take that trade. But that is what the algorithms do. And I'm going to leave that to the algorithms. Right, so how is bar 1 forming? Is bar 1 a big bull trend? So big bull gap, bull trend from the open? Well, the first thing it did was sell off 4 points, right? And so that is not a big bull trend yet. And we're back at the open. But can we go up at least 4 points as well, right? We know now that we can go down 4 points, but we haven't even gone up 4 points after the open. So I'm looking to see what happens. We have a little tail already, so it could still be a big bull bar on the daily chart. And if you buy above bar 1, you're going to have to buy at the highest price ever, right? Because we're at an all-time high. You're going to have to buy at the highest price ever. If it comes down 25%, then you just have like the highest buy ever before the market jumped into a recession. But it's better to just forget where we are, right? We're just trading numbers. We don't care if it's at 4,000, 3,000, 2,000, 5,400. Nobody cares. It's just a number and it's just a pattern. But somebody has to be the worst trader in history. So. Not good to sell, right? You can't say, well, because we're so high and overextended, I'm just going to start selling. That is probably not what you want to do. If anything, at an all-time high, all of the bears in the world are losing money, and so you don't want to join their team, right? Now you can say it's a channel line overshoot. So we have a channel here on the 15-minute chart, and then it's a channel line overshoot, measured move up. So we might have to come down, and that is potentially true. But the gap is so large that it might not be a pattern on the 15-minute chart, but on the 60-minute chart, right? And on the 60-minute chart, there's a measured move 54.27, and we're hovering around the 54.27. So I'm thinking if we're going to come down more, we're going to come back up to 54.27. And if we go 54.40, 54.35, we're going to come down 54.27. But 54.27 seems to be the measured move on the hourly chart on the RTH. Let me put that here, 54.27. Now we got one news event behind us. We have another news event in front of us. FOMC is tonight. And so market might try to get neutral again. And so since the big jump of the previous news, it needs to find out what neutral is before the next news item. And less likely that the next news item is going to be another big bull event as well. So probably the FOMC news release will end up being a trading range rather than a big bear bar or a big bull bar. So hovering around to 54.27. Now a measured move like this on the hourly chart will typically go and touch that number for a couple of hours. So if we go down 10 points, 20 points, there's a chance that we'll come back to the 54.27. And if we go up 10, 20 points, chances are that we'll come down as well. Any big other news event will erase these magnets and will create new magnets. And so FOMC news release will create new magnets and then we'll leave these magnets behind. So can you then buy bar 1? Well, the problem for the bulls is, where's their stop, right? Where do you want to put your stop? The only logical place to put your stop is below yesterday's 77, right? And that is, let's put this GoToWebinar thing out of the way. That is, let's put this GoToWebinar thing out of the way. I can't move it. No. No. Why doesn't it dock? I don't know. There we go. Now I lost one chart. All right, what was I saying? Well, the problem for the bulls is, of course, the stop, right? Where would the bears put their stop? Well, the only thing you can really do is put it above bar 1, or a measured move above or something. And so that's why I think we're hesitating. Nobody really knows what to do with this bar 1. You can't sell below. You can't really buy above. So we're probably going to need a couple of bars to set an initial range, and it's going to hover around that 54.27, and it might jump to 54.35 and 54.41. Right? Not a bull trend from the open, right? So big gap up, not a bull trend from the open, but also not aggressive profit taking. So if the bulls are confronted with a big open profit, will they en masse take profits? If that would be the case, we would get the follow through and consecutive bear bars, and that's not happening either, right? Bar 2 is already spending 3 minutes inside bar 1. And so it's not a big profit taking day and then come down into yesterday's range. It's planning to go a little bit higher. And so it's more likely to go sideways than to go further, much further down. Looking at the 5-minute chart here, still likely to go more up, right? So we've had 2 legs down. We've had 2 legs up, if you will. That's an inside bar. So we have 2 legs up. We now have a correction, and so it's likely that we're still going a little bit higher. Probably 54.35-ish and 54.39. Bulls will buy above 2 if it's higher than bar 1. But it's more likely that they're going to scalp instead of taking a big 20-point swing. Bulls that buy here are buying above 2 with a wide stop and ready to scale in lower, probably 5 points lower, 10 points lower, etc. Confident that if we go above 2, that will go above 2 again, so that they can then exit break even on the first entry and making a profit on later entries. So our measured move above is around 10 points higher, and that is probably where the bulls will want to get to. But dangerous to buy up here if you're a single lot trader, right? It is a valid entry. Big gap up, big bull bar, closing on its high, but probably have to scale in lower. What will the entry bar for the bulls look like? The bulls that buy above 2, they will want to get at least to this measured move 54.41. On the 5-minute chart on the Globex, there's bulls that have bought 54.2875, right? 1 tick above that bull bar. They want to get at least 10 points, right? They probably want 20. So 38.75 is 10 points for them. The bulls that are buying above 2 need at least 10 points as well, right? So that's 42.25 in that range. By now, the entry bar looks really good for the bulls, but we still have 2 minutes to go. You can see how we're going towards magnets. I can take that higher low away because this is now the higher low, right? So even on the Globex chart, this was the higher low, but this is now the higher low. And so the higher low here is the same as the higher low on the Globex chart. So everybody's using the 2 low and using 54.40-ish as targets. I bought above 2 and I'm looking for 10 points, 42.25. You can also say, okay, what if the stop is 1 tick below 2, and what if the 2 closes the target? Then 42 is 2 to 1, right? 41 is the measured move, and 42.25 is 10 points above 2. So there's a lot of targets here in this little area. And so I'm expecting us to stall around here if we get there. All right, very good entry bar for the bulls. But it's still in the context of a trading range, right? So it's not so much a bull trend from the open. I do think we're going to stall and not continue another 20 points up. The measured moves are usually overshot, right? So we're going to overshoot this measured move. Could even overshoot it by 10 points or so. But even then, it's probably going to come back. This is such a big, obvious measured move target that it's going to be a magnet, in my opinion, for the rest of the day. But we'll see. Right? Which means 5 points above, 10 points above, we're going to come down to it. 5 points below, 10 points below, we're going to come back up to it. That measured move is a strong magnet. And it will form, together with this measured move probably, a range until the FOMC report. Question, Tim, do you ever look at related markets? No, I think that's the biggest mistake that you could do, is buying on something on this chart because another chart goes up, or selling something on this chart because another chart goes down. There's all kinds of reasons why other charts go up and down, and it has nothing to do with this chart. And so I never ever look at what another instrument is doing other than if I would want to trade that instrument. So I don't care what NASDAQ is doing. I don't care what the DAX is doing. I don't care what Russell is doing or anything like that. I don't care. Every chart will have its own risk reward. And the fact that this is a bull bar on some other instrument, well, there's 100 stocks in the NASDAQ. There's 500 stocks in the S&P. And only a subset relates to each other. So it's not relevant. It's not relevant. If anything, it's going to distract you from looking at this chart, right? And so everything that takes my eyes off of this chart is going to hurt my performance rather than help my performance. I need both eyes on this chart, and I need both eyes on these bars and nothing else, right? And that's going to make sure that I focus on the right things. So related charts, everything that works sometimes is just not good enough for me, right? So we hit the measured move. And then the follow-up question is, would you avoid taking trades in the same direction in correlated markets? I just said that there is no correlation. So I don't look at it, and therefore I don't even know what it's doing because I don't have my eyes on that chart. All right, so we hit my targets. I just got out. Remember, I said that we're going to hit this target an hour ago. Well, no, not an hour ago, but 46 minutes ago. We haven't had a bear bar that we went below, right? So bar 2 never went below bar 1. If bar 4 forms a bear bar and we go below it, we can see if the bears can actually sell below a bear bar, right? And so looking at yesterday, they don't. But we're at measured moves, and so above that measured move, the bears will scale into shorts. Now, if bar 4 becomes a big bear bar, I think bulls will exit. I don't think bears will sell, but there's another target here that we might want to get back to, that 54.27. I think chances are that we're going to stay close or very close to the 54.41. Of course, bar 3 is also the close on the 50-minute chart right here, and on the 50-minute chart here, Globex. This was a follow-through bar. It's an inside bar, so it's a higher low and it's an inside bar. You would expect that inside bar to reach at least 1-to-1, and we're at those targets as well. So we have one leg up, two legs up, three legs up. We're probably going to get another leg up because this is probably more spike, and then this is the first leg. This is the second leg. We might pull back to these highs and then get a third leg up, and then this is the first leg. This is the second leg. We might pull back to these highs and then get a third leg up. But what will the follow-through bar look like on the 50-minute chart? I don't think it's going to look all that great. I think bears are selling here and bulls are taking profits here. I think yesterday was, some folks will say like yesterday was pretty special, right? But if you follow the teachings, you would actually never have gotten in trouble. So if a gap down, you could sell below bar 1. If you didn't sell below bar 1, then you would want to sell a pullback. Well, you never had a bear bar that closed on its low where you could sell below. So you could sell below 19. After a micro channel, would you want to sell the first reversal? You probably want to sell the second reversal. And that actually started good. Like you can see how there was a strong bear follow-through bar, but then hesitation. So you would get out here and then forget about shorting, right? That's when you want to buy. So if you follow the Brooks teachings, even on a V reversal like here, you would have never gotten too much in trouble. Even selling below 3 would have not got you in trouble, right? You can still get out break even. Better to look at the measured moves down. So measured move here to here, you can see how we reached it. Once we tried to continue, but we failed, and so the bears took their profit and the bulls reversed the market. But we failed, and so the bears took their profit and the bulls reversed the market. Oscillating around the 54.41 target. Will the bears sell a sell signal bar back to the open and back to the 54.27? Well, they'll try, but they'll probably have to scale in higher. You can take another look at the chart together with the Globex, right? So we have this and then the follow through. So this follow through reached 2 times risk, right? So this bar here, we could stop, tick below, you buy the close, you got 2-to-1, and so an obvious target for profit taking. You could say it's a bull channel, but it's hard to find it. It's probably easier to say that this is all going to be a trading range, 54.27, 54.25. That range is all going to be a trading range, and that the market is going to determine based on FOMC if it's going to go further up or down. So we have a bear signal bar. It's following a micro channel, so it's probably a bad sell, but it's a good reason to exit longs if we go a tick below it. We haven't done it yet, but 54.37 is 10 points down to the 54.27, which was a magnet as well. So I do think that some bears will sell below 5 if we get there, but I'm personally not interested in joining them. And 5 minutes from now, or 4 minutes from now, we'll also have a close on the 60-minute chart on the Globex. You can see I said this is going to be a strong magnet. That this is going to be a strong magnet, and that if we go 5, 10, 15, 20 points below, we're going to come back to it. And then if we go 5, 10, 15, 20 points above, then we're going to come back to it. And that's exactly now what's happening. So we dipped to, what, 4 or 5 points below that measured move, and we instantly reversed back to it. If we're now going to go 5-10 points above, I think we're also going to reverse back down to it. Now the bulls are obviously trying to get the hourly close on the 60-minute chart to be as good as possible, because what they see is that it would be follow through on a strong hourly bar. Strong hourly bar, tick below to the close, 54.75, but not today, right? Hourly chart, so it can easily take 20 bars or more to get to that target. I think here we have the 54.41. So people that didn't pay attention at the open or before the open, there was a sideways range on the Globex hourly chart between this high and this low. We went sideways for 4 days, which is 24 hours times 4 days, or 23 hours times 4 days. So a bar or 80, that has an impact. And so overnight we broke above it, and now we broke strongly above it. Measured move up is 54.41. And so that's how I got to that target already before the open. And then if you see that above 2, it's 10 points to that magnet. That's an ideal scalp to take, right? And so having that target before the market opens is good to find a good trade. But it's also a very strong magnet, and so it will form as a magnet. So 60-minute chart, good follow through, probably going to go higher over the next couple of days, unless FOMC makes a change to that, but this is good follow through. Bull bar closing on its high, minimum reversal down, and continuation with a bull bar that's almost closing at its high. That is good follow through. Almost closing at its high. That is good follow through. Bulls want to go above 5, close above 5, and then get a measured move the size of 5, but they fail, right? Bears didn't get to trigger their sell signal. You now have one higher low and a second higher low. So a lot of bulls will move their stop to below 1 and below 2, instead of having it all the way down here. But the market is in a trading range and not necessarily in the bull trend, and so a lot of bulls will wait for the average price to come closer to the current price, so that they don't buy too high above the average price. Right now, the average price is around 5,400, so you're buying 40 points above the average price, and so something needs to look really good for you to do that, right? And then bar 5, going one tick above 4 and just selling off and closing on its low, that is not a strong bull trend or what you want to see. In a strong bull trend, you don't have these closes so far on their low, like they'll have a big tail. And so this is not a bull trend, it's a trading range. And in a trading range, you don't want to buy 40 points above the average price. And so bulls use bar 6 probably to exit longs, and they'll go flat, and they're ready to buy around the 2 low. As that chance of bad follow through on the 15-minute chart, and it was bad follow through, right? So the 15-minute chart closed as a doji, which is not even the minimum amount of follow through that the bulls want, because the minimum amount of follow through that bulls want is at least 1 tick. They got 0 ticks. Is it? So this opened on 40.75. Yeah, so they got a perfect doji as follow through. Well, if you bought above this 15-minute bar expecting a rocket ship to the upside, and you end up with the doji instead, do you want to hold or are you going to exit? I think at least half the bulls will exit, and probably 75% of the bulls will be disappointed and exit. The other 25 know that we might still go up for a third leg, and then they'll just buy lower and scale in. Other bulls will just directly exit after such a disappointing follow-through. Probably 75% of the bulls will be disappointed and exit. The other 25 know that we might still go up for a third leg, and then they'll just buy lower and scale in. other bulls would just directly exit after such a disappointing follow-through. Now let me put this measured move to exactly the right price, because it's 54.41. You always have to be alert with very big news events that at the end of the news event, so at the end of the first bar, price is already where it wants to be. Okay, so if you have a magnet at the current price, that price is happy where it is, there's a news event, price rapidly changes to a new price, either up or down, you also have to be aware of the fact that price might already be where it wants to be. And so the follow-through is usually limited after such an event. So you can see it here that you have a big bar and the follow-through bar is only a couple of points, right? Why? Because price is already where it needed to be. That was the magnet, and the next magnet is here, and so it's slightly going up there. Sometimes you have these big news bars and they just start reverting down and going to the low of the news bar. But if you buy this hoping for a one-to-one, that's probably not going to happen, because this magnet was there for a reason. It stalled exactly at where it wanted to be. If it wanted to be here, this bar would have been bigger and it would just want to be there instead. So big climax news bars, never expect 100 points follow through. Always expect that it's probably gravitating immediately to where it wants to be. And the same happens on FOMC. Can the bulls get another breakout high of 5? I don't think they will, but if they do, the target is 48.75. What are the bulls thinking that bought above 6? Well, they're thinking we're 5 minutes into this bar and we haven't gone a point above 6. And so they're very disappointed. They'll try to get out break even. So you buy one tick above 6, you're now break even. And so will they get out? They'll probably get out, right? And so this could become a second leg trap and come down to the close of 1 or the midpoint of 1 around that 54.27. Looks to me at the moment that it's a second leg trap. I set the 60-minute bar closed, so the 60-minute bar closed exactly at the magnet. Right, one tick below the magnet is where the 60-minute bar closed. And then there's another 60-minute bar here that started at the measured move target and is now at 54.41. I'm thinking that we're going to go back to the 54.27 in the next few hours, which would be the low of the close of 1. Now, the market is very bullish, of course, and so you don't have to take a short, but you can then take a long around that level if it sets up there. Still a micro channel, right? Every bar is higher. All the micro channels stopped here at 5, but no bear bar triggered below a bear bar, so no bear signal triggered. If bar 8 is a bear bar and we go below it, it's the first trigger of a sell signal. Can we get another leg up, or are we just going to oscillate around 54.41 for 4 more hours, 6 more hours? No, 4 more hours until FOMC. So we could, but I would definitely be out of longs below a bear bar closing on its low. We've had bears on bar 1, we've had bears on bar 5. We have bulls exiting disappointed above 6. And so if 8 becomes a bear bar on its low, it's a valid short, right? And so if you're long and you get a valid short signal, you need at least to go flat. So bears triggering a sell. It's low probability considering the bullishness. It's low probability considering the bullishness. And you would take it to the midpoint of bar 1 or the high of bar 1. More likely that we get some sort of a third leg up on the 50-minute chart, you would say. But you can see here what's happening. We're far above a bull channel. The 50-minute chart is getting no follow-through. So it's starting to fail, and at least it's starting to go sideways instead of further up. There's no eager bulls buying here for big swings. Can the bulls get an outside up bar? Micro double top, so the bulls will want to take it out. I don't want to buy up here. So the bears are forced out, right? There was a sell signal below 8, and the bulls completely reversed it. They'll sell again a measured move higher, and so that is 54.48. Now a lot of bulls can now buy because their stop is now below 6, and so they can increase their position size, and they'll go for 54.48 as well. So that becomes a clear target. It was tagged, but I think we need to go one tick above it. 54.48.25 then. And then 52.25 would be right here. I scalped it to 48.25. And then 52.25 is the next target. And then 52.25 is the next target. On the 50-minute chart, you can now nicely see what's happening. We had a big spike, and now we had one leg up, two legs up, a pause, and we're starting the third leg up. So what does a bear do? Well, a bear sells the close of 8, for example. So let's say you sell the close of 3, right? 5, sorry. You sell the close of 5, you sell more above 5, you get out break even in the middle. You sell the close of 8, you sell above 8 and a measured move up, 48.25, and then you're already out break even. And so the bear scalpers, unless they scalped short on bar 1, the bears are out break even if they want to. It's just the bears from bar 1 are still stuck. If you sell the close here, you sell more higher, you didn't get a chance to get out break even. There's a big gap, of course, from the 2 low to the 6, from the 2 high to the 6 low, a big gap. Bulls are hoping that's that is a measuring gap all the way from yesterday's close. So that would lead to an enormous target here of 54.87. Bears will want to short and close that gap. 3 legs up, so the spike, you can also say here the gap is the spike. 2, 3, 4 is the first leg, 6, 7 is the second leg, and 9, 10 is the third leg, and that is reasonable as well. But as bullish as it is, you probably don't want to short or go short against anything here. It's more of a developing channel, and a channel is the start of a trading range, but this could be a channel that's lasting 20, 30, maybe 100 points more. And so bears with deep pockets are shorting against it. Confident that we're going to see 54.41 today or tomorrow, and they'll just but they'll just sell 5 points higher, 10 points higher, even up until 100 points higher. They'll do that, confident that they'll make money doing it that way. But you need very deep pockets, and you probably need to hold for a long time as well. Question on the Globex chart, bar 1 left a gap open. How important is that gap? Should we look at gaps that span from the RTH to the ETH? Absolutely. So you can take this low, and you can take this gap, and you can take it as a measuring gap, right? That gets to 50.25. 20 points above bar 2 is 52.25, so you could see price coming there. So good follow through on 9. So bulls want to get to 56 and 52. Stop is now probably below 5 and 6. That's why 9 is so big, right? As soon as 9 gets a new high, you have a new higher low. And so people that had their risk to the low of 1 and 2 can now decrease their risk to the low of 5 and 6. And that means they can probably increase their position. And so 9 is a big bull bar because of the limited risk. Same happens on the 50-minute chart, right? The chart, right? One-to-one on 9 is also 52 or 51.75. So there's target range in the 50s, 54.52 to 54.56. And 3 legs, right? Gap up, leg 2 and 3, 4, leg up 6 and 7, and a leg up 9 and 10. Bar 12, this is bar 11, but bar 12 will be the close of the hourly chart on the RTH chart. So that will be this chart. Now, what is the easiest way to make money in the stock market these days? Well, as a CEO, you just declare your own company to be an AI company, and off you go, right? I think Apple announced that they now have intelligence, artificial in that sense, and so their stock price just rockets up. NVIDIA, of course, is the underlying technology for a lot of these hosted software environments, and so their stock price has rocketed up and is now split. So I think an NVIDIA stock is now 125-ish, something like that. So they did a 10-to-1 split. That has a small effect, right? So it just makes those stocks more easily accessible for people that have smaller wallets, but also it makes it more easily to hedge. Right? If you have specific ratios on how you hold NVIDIA against Amazon, for example, then you can just much more easily maintain those ratios. So that split. Apple rose yesterday by 6%, I think, just mentioning that they're going to do something with artificial intelligence. Artificial intelligence, like the Gen UI stuff, is not new at all. The technologies and the methods and the theories are from back in the 80s, refined back in the 90s. And so nothing there is new. It's just the promise and how we're going to apply it that's probably new. It's also an insane consumer of energy. The amount of energy that is being used in the data centers for ChatGPT is just off the charts. I think the biggest energy consumers in the world are now Bitcoin miners and artificial intelligence companies. And so they are claiming enormous data centers. And so cloud providers like Amazon, AWS are profiting a lot from that as well. Oracle, those types of hosters are benefiting probably the most because they don't have to bet on who's winning the race. They can just provide the platforms. And in Europe, similar, there's a big chip maker, a big chip machine maker. So for AI, you need the software. The software needs to run on the hosted platforms with the chips in it, and then the chips need to be made by a chip maker. And so the chip machine maker, ASML, for example, is also just like NVIDIA in a parabolic wedge on the daily and weekly chart. And so it all ties together. But in those, if you're an investor, in those situations, probably better to just invest in the underlying technology or the underlying provider so that you don't have to guess who's winning that fight, right? Whether it be Meta or Apple or ChatGPT, you don't, or OpenAI, right? You don't care because you're investing in the chips that are going to be used, or in the hosting centers that are going to be used, or in the equipment of chips that's going to be used. And so you see a lot of those underlying stocks, those suppliers to them, also raising a lot because that's what smart investors are doing. Coming to the targets, 52.25. Need to be careful that we're not going to miss it by 1 point, right? It could be a 1 tick, 2 tick trap. It's now 80 ticks. You need 82 ticks to go 1 tick above 52.25. So you need 52.50 to go 1 tick above 52.25. And so if it stalls here, then it would be an 80 tick trap. Now you have 81 ticks. And now you have 82 ticks. So 20 points above 2. A lot of bulls that bought above 2 will take profit here. And again, bulls taking profit is never a reason to just go short, right? What was the 1-to-1 on the news bar? The 1-to-1 on the news bar was 54.57. So 87.25. The close was 54.22.50. 1-to-1 is 54.57.75. We can still go a little bit higher, 56, 58 area. This leg was this many points. This leg is now this many points, right? And so you can see the symmetry between 2, 3, 4, and now 6 to 12. Now 12 is the close of the hourly bar, and the hourly bar closed on its highest tick. There's a really high chance that we're at least going to go 1 tick above it. But you can see how we have symmetry now, leg 1, leg 2. We could get leg 3. So this could pull back at least 50%, right? And then set a new high or third leg up. There's definitely profit taking here, right? 20 points above 2, logical profit taking area. You can also look at the hourly chart. So if you take the hourly chart, strong bull bar closing on its high. Is this the measured move from here to here? Probably. Oh, way higher than that. Okay. So we can't find anything reasonable here on the 60-minute chart. So let's look at the daily chart. Daily chart, 55.30. Daily chart RTH, also much higher than that. So 5,500. We'll still have to see about that. That's probably not going to come today. No. Bears are shorting for 54.41. 10 points higher now. So they sold 54.41. 5 points higher, 54.46. 5 points higher, 54.51. I'm expecting a little bit more of a pullback before getting another leg up. Market's really strong, right? No interest in selling. I do think 56 to 58 area will reach, but I was expecting a little bit more of a pullback than 13. Leaves a gap as well to the 11 high. 13 doji bar, and we now went a tick above the hourly bar. But I do think we're going to need a little bit more of a pullback. I need a little bit more of a pullback. It's by the close on the 50-minute chart. That little doji symbols a pause, right? So this is a leg, that's a pause, starts the second leg. If we now get a pullback and another leg up, that would be a third leg on that chart. On this chart, we had a first leg here after the spike, second leg, pause, and a third leg. So on the Globex chart, we already had that 3 legs. On this chart, we haven't yet. If this would come down, it would still probably be a minor reversal on the first attempt, and then either create a second leg up or a test of the high before it would have to come down. So there's nothing to sell on either of these charts, whether it be the 5-minute or the 50-minute. There's probably nothing to sell. Now, the first thing that bears need to do to break a bull trend, if you think about it, a bull trend, let me draw. A bull trend is a series of higher highs and higher lows, right? And so the first thing to break a bull trend is to break one of the higher lows, so that you cannot argue a set of higher highs and higher lows anymore. So as soon as one of these higher lows is taken out, effectively the bull trend is over. Currently there is a higher low at the 9 low, right? The start of the last leg up. And so what bears need to do is break the 9 low. Now I think that's too ambitious. And so what you want to see is a small second leg up, and then you have a higher low, a higher low, which is closer for the bears to break. But if they break a higher low, it's much more likely that we're in a trading range than that we're in a bear trend. But until there is a higher low broken, the bulls have nothing to fear. It's a strong bull trend. And because the 9 low is so far away, it's probably not possible for the bears to get there. And so it's more likely that we're going to get another leg up. You can think about it as, well, that 9 low is here. We need to sell here, here, here. We need to keep selling all the way until the 9 low. There's probably enough bulls here preventing that. So they'll scale in here. And so the bullish power is going to overwhelm the bears somewhere as they're trying to get to that low. And so they're probably going to fail. Now in this scenario, we have a third leg up. So it's a little bit more likely that we get to the 9 low. I think the main reason that we could get to the 9 low is because of the magnet, right? Otherwise, I would not trust it. But with the 3 legs and the measured move there, we could come to the 9 low. But in another situation like that, so for example here, the 48 low, well, the bears can never overcome that distance. Same here with the 57 low. The bears will try, but they can't get there. But then if you get a small leg like this, so you have higher highs, higher lows, higher highs, higher lows, and then you have a small leg, well, the bears can actually get there, right? And so as from when they break that higher low, market's in a trading range. And it's going sideways, much more likely than down, okay? And so currently, that pivot point or that rollover point between bull trend and trading range, or bull trend and bear trend, is at the 9 low. This is effectively a low 2. 8 was the first time that we went below a bear bar. 15 is the second time we go below a bear bar closing on its low or below its midpoint. And so it's a low 2 below 14. Now, it's not a very attractive low 2, but a low 2 at a range where bulls have had 20 points that has more likelihood. And so it's a credible signal to exit longs, low 2. But a low 2 at a range where bulls have had 20 points that has more likelihood, and so it's a credible signal to exit longs. Low probability short, but it's a low 2 in a developing trading range, and so bears will sell, trying to get back to 54.41. It's selling against a micro channel on the 50-minute chart. It helps to know that the bulls have left the building, right? 20 points above 2, so a lot of bulls will take profit. 13 was weak. But I admit it's not an easy sell. And I probably would want to sell with scaling in, or just get out and assume that the bull trend is resuming, just like a lot of bears did below 8. I do think we're going to close this gap, so the gap to the 7 and 8 high is probably what we're going to close, and we're probably just going to go back to 54.41. Close the gap, okay? So exhausting gap there, close the gap. Good entry bar for the bears. Can they get 43? That will be 10 points below 14. 43, and then 48, 41, 48, 41. Bulls that buy any close here, 9, 10, 11, 12, they get disappointed in the buy the close rally, so they exit, right? So that buy the close was sell, break even on the close of 13. We have one more open gap to the 2 high, right? That might stay open. This was a gap to the 7 and 8 high, and it closed. And so if we would go higher, then I'm still expecting gaps to now close. And if this is a measuring gap, it's probably not a measuring gap from yesterday's low, but it's probably a measuring gap using indeed the Globex chart, right? And so the measuring gap was to 54.50 area. Now, second leg down is not necessarily a lower low, right? Second leg down can be sideways and can even be higher. So 17, if it would close somewhere in the middle of 15, that counts as a second leg down as well. If it would close somewhere in the middle of 15, that counts as a second leg down as well. A lot of bulls, of course, using 16 to get out, right? Break even on 9, break even on 12 even, right? If you buy the close and by the close of 15, you get out break even. There's a chance that we can still get to the open of the day, and actually to the close of 1. If the bears can break the 9 low, that would actually be a measured move target to the low of the day, 25.50. It's unlikely with this bullishness, but there's a chance. It's a wedge top at the open. So bull gap, wedge top, low 2 entry short on 14, follow through now on 17. Probably you're going to stall here around 41, but if it continues down, it's going to probably fill the gaps here and come to the 1 close. Now, look at the micro channel on the 50-minute chart. It was a bear bar. It's a low 1. Are we going to find sellers here? Probably not, right? And so it still might just stall here, get to 41, and then stall. But if 18 is a continued bear bar and it closes below 9, then we're going to go all the way down here most likely. This serves as 2 legs. I said this was strong enough for a second leg sideways to down. This is the second leg sideways to down. What about buying here? I would not. I think this is still a credible wedge top at the open, and so I'd be hesitant, especially after 17 closing at low, to buy above 18. It's now so much a trading range and not a strong bull trend anymore that you want to get closer to the moving average for buying. The bulls on the close of 16 are stuck, right? Their stop is below 9, probably, maybe below 5 and 6. They buy the close, and they got no follow through at all. In fact, it sold off. I said 16 is probably a bar where the bulls will get out and not so much get in. But we need to get into the midpoint of 16 for the bulls that did buy and bought more lower to get out. If you put your stop below 9, then buying below 18 is very attractive, right? Small risk. And so that says something about the probability. It is a buy for a swing, in this case probably a 10-point swing. But with these bear bars closing on their lows, there is an increased chance that it's not going to work. I think it's also a little bit too far from the moving average to buy above 18, but there will be bulls that will take that trade. It's good for a scalp at least, right? Should go to the midpoint of 16, and there is a chance of a new high. And so if you buy it, you need to go for at least 10 points, 55.25, and maybe a piece of it in the middle of 16. The bears will try and get to now below 9. They know that there are stops here, a new leg up. So 5 p.m., so close of the second hour on the ETH chart, right? So we have this big, huge bull bar, and good follow through in the hour before, and follow through again with a close above the prior bar. So hourly bulls are believing this is going to go to 54.75-ish over the next hours, right? You know, if that's 20 hours, you're still looking at next week, Monday. And so we'll have to see, but it's likely that we're going to get, even if this pulls back, that we're going to get a second leg up on the hourly chart. On the 15-minute chart, I said 1-to-1 on that bar is 54.57. 2-to-1 on that bar we just reached, so that's no longer in play. And 1-to-1 on that bar is 54.55-ish. So it looks like bulls still want another leg up to 55 and 60 range. Can bar 19 become a reasonable good entry bar for bulls above 18? Now, 3 minutes into the bar on a high 2, right? 2-legged pullback, high 2, bar 18, small stop, so looks to be like a nice trade. But you're 3 minutes in and nothing has happened, right? If you remember bar 3, 3 minutes into the bar, 3 minutes into the bar, we were trading somewhere here, right? A good 4 points higher than the entry point. Here we are 3 minutes in, and we're trading a tick or two above the entry point. And so bulls are already suspicious about what's going to happen here. It's not the same eagerness as on a good entry bar here or on a good entry bar here. Now we're approaching the midpoint of 16. That was a target. And then there's the midpoint of the 15-minute bar, which is 49. It's another target. Oh no, we already hit that here during 16. So you just have the midpoint of 16, which is 46.50. But something is fundamentally different between this buy setup, and until now, this buy setup. It's still a good long, but 5 minutes into the bar, we haven't moved 3, 4, 5, 6, 7 points, right? So that tells you that there's probably not 20 points on this swing. In fact, if it would close as a bear bar or disappointment, a lot of bulls would exit at their entry price, So a tick above 18, a lot of bulls might just immediately exit a tick above 18 as well. Now, if it's a bull bar, they'll probably hold on. You get another bear bar, that's when the bulls start exiting, trying to get out break even. And we got the smallest of bull bars, 2 ticks. So that actually is one smaller bull bar, but that's not the right type of entry bar that you want to see. Can we still get a new high? Absolutely. I think the symmetry between these 2 legs, so the symmetry between this leg up and this leg up. And so if you put symmetry, we'll end, like we would get there, right? So the size and the size and third time the size. So it's possible that we're going to get to a new high, but I think you want to be quick to get out if it goes against you. Would you call bar 16 a high 1 and bar 18 a high 2? Yeah, because it's a 2-legged pullback, right? So 14, 15 is the first leg, reversal up, continuation 17. So it's effectively an ABC, and every ABC 2-legged pullback is a high 2 or low 2. So even though it didn't trigger the high 1, it still functions as a high 1, and then this functions as a high 2. Don't be too precise with the definitions. We can argue about things all the way. But the thing is that this was a 1-legged pullback and continuation, and this is already 2 legs of a pullback. So this pullback is fundamentally stronger than this pullback. And so the bull trend is effectively weaker than it was here. And that is the only distinction that you need to make, right? So purists will argue about if this is a high 1 and a high 2 or whatever the label is. What you need to understand is that this was a 1-bar pullback and continuation, and that this is 2 legs, and so the bull trend is fundamentally getting weaker and weaker. That's all that matters. And so if we now get a new high, would I want to buy a high 1? No, because last time we got like a pullback that was 10 points, right? And so if I get a 4 points pullback now again after a new high, I probably don't want to buy that because I'm expecting pullbacks to be bigger instead of smaller. So once you know that high 1s are not working anymore, you don't want to take them anymore. Now this is starting to fail, but the bears can get it to below 9. We need to get above 17 to make it more bullish, right? Because then I'll be looking at a measured move to 56.75. Let me put the valid bull signals. We're now at that midpoint of bar 16. See? And so we'll continue up. If that is going higher, now we have new bulls, because these are the bulls that are scaling in and exiting here. And so if we go higher than this on a bull close, we have new bulls entering the market. But there's an increased chance that 21 is actually coming down instead of going further up. Always got to think about who's still in the market. Well, the bulls of bar 2 are out of the market, right? They're at Walmart spending their 20 points. Same with the bulls on 3 and 4. Bulls on 6 are out, they got 2-1. Bulls on 9 are out, they got 1-1 in the third leg up, and so they're out as well. The bulls on 16 scaled in lower, and they're out break even after bar 17. And so the bulls that are buying 18, they're still in the market, stop below 9, and wanting market to go higher. Bears, bears selling 4 and 8, they are out break even. Bears on 14, they're still in the market, right? Because they haven't reached 2-1 yet. And they're still holding for 41, and they're holding for 38.50. And the bears from bar 1 are also still waiting for some type of break even. This close and that close, 38. So as soon as we go below 18 and below 9, the bears can take over, because then all of the bulls are out of the market. Looks to me that we might try to get very close to the 9 low. And like I mentioned, 54.41 is the dance today, right? Dancing below it, dancing above it, coming back to it. I mentioned as we were starting to go up that the bears would sell 5 points higher, 10 points higher, and so they did. So they can collect 15 points if we now reach 5441, because the one on 5 points higher and the one on 10 points higher, so that gives them in total 15 points. And they just got it. The low of 9, right? Can the bears break it? Or will we form a double bottom? I think we're going to break it. If we don't, and we form a bull bar here, it's an excellent buy signal, right? If the bulls hold their low, and we set up a bull signal here, then it's a high 3, but also a double bottom. Now, can we get a tick above 18? That's now the scalp. The scalp is 2 here. Remember, some bulls have bought a tick above 18. They have their stop below 9, right? And they want to get out, break even. So if we get to a tick above 18, some bulls will exit there. Other bulls will see, hey, double bottom, 3 legs down for the bears. Credible long signal, and could be good for a new high of the day. So it's likely that we're going to go a tick above 18 now. But if this grows into a very nice looking bull bar on the double bottom, after a wedge pullback for the bears, then there's probably bulls buying above 22. And so what if that fails, right? Even so, if the long doesn't trigger, or if the long triggers and it fails regardless, well, then you're looking at potential to measured move down, right? So then you're looking at 25.50 for the bears. But I'd say that this is 2 legs, like a 2-legged correction on the 50-minute chart. This is a double bottom. This is a wedge pullback for the bears. So there will be probably bulls buying the 22. We're almost a tick above 18. So now you have the question, will there be bulls getting out because they're happy with the break even? Or will there be bulls getting in happy with the double bottom wedge pullback long setup? So it is a setup, but just like every setup, it has a chance of failing as well. Here you have that break even for the 18 bulls. So if you're an algorithm and you buy here a tick or 2 above the stop, you already have, what is it, 6-7 times your risk. And that is what quants, for example, will be programming algorithms like that. So, all right, double bottom bull. If you're short, this is probably a tick above 22 is probably where you want to get out, right? It's a credible long signal, so bears will exit. Bears will put a sell stop below the double bottom here, so that if it breaks, they're in the short. Think about it. The bulls here bought, what was it? 60 points above the moving average. They bought here about 20-30 points above the moving average. Will they buy here 10 points above the moving average? Absolutely. But you can also argue the bears managed to get all the way down to the start of the 3rd leg, and that is not a strong bull trend. So it's definitely more of a trading range right now. and bulls will treat it as a trading range right now, and so they'll scalp. And bears know that selling above new highs will probably be profitable and will probably get them down to the 54.41, right? This 54.41 is going to be a very strong magnet, at least until F1C on the 60-minute chart, right? So if it needs to touch it for 10 hours, for example, then all day today and tomorrow it might just hover around that number with a range of like 20 points, right? So 54.60, 54.20, probably gonna come back to 54.40. Bulls buying the double bottom high 2 or high 3. But 2 minutes left. Better, of course, if the 15-minute closes as a bull bar and we go above that 15-minute bull bar as well, then you have multiple time frames buying. Makes a setup better. Can we break out above 21? Then the first measured move target is 53.50, which is the high of the day. But it doesn't look to be a strong breakout. We still have a minute left, but it needs to close far above 21 to be a breakout above 21. So what do you do if this is a bear bar? You probably want to get out break even, because then the bears will try again to break this double bottom. If it's a good looking bull bar, you probably want to stay in and see what the next bar is going to bring. But it's a trading range right now, so you want to be quick to exit if something is disappointing. Now, this is as reasonable as it gets for an entry bar, but it's not a breakout above 21. The bulls will probably wait for 24 to make decisions. Hey Tim, do you look at VWAP? Nope. What you see here is what you get, guys. I have the 5-minute chart and I have the moving average. And if I'm trading, sometimes I don't have the moving average. I use nothing. This is it. Well, this is already like candlesticks are an indicator. But that's it. By the way, I was in Orlando at the Al Brooks price action event with Al and Ali. I talked about a journey of becoming consistently profitable. In there, I talked about belief in price action trading, right? So the fact that a lot of attention on learning price action will be lost if you focus on non-trivial things, right? So focusing on indicators, focusing on VWAP, focusing on Bollinger Bands, focusing on everything that ultimately is not relevant, is just going to steal time on becoming profitable. And so the more people look at other things, the more they will not look at the right things, in my opinion, and the more time it will take for them to get to where they want to go, right? And so something starts with seeing that this is possible, right? So I'm putting measured moves here on my chart, and I put them before the market opens, right? And I said what was going to happen at these things. Now that's just a measured move. Like you need a Fibonacci whatever drawing thing to find them. There's no indicators at all necessary. So part of my goal of being in here and presenting in the trading room is to make you believe that it's possible and that all you need is this chart. And with that, I hope that some of you will say, okay, then I'm going to go all in on this. I'm going to remove every indicator and everything that I have on my chart right now that's not helping me, and that's going to clear the clutter, and that's going to focus me on learning the right thing. And so if I reach that on at least one of you guys, then I feel like I've won a little bit. The other thing that I talked about was probably a lot of psychological and practical things, which I'll leave to the people that were there. I think it was a magical event. It was at least a magical event for me. And I was very happy to be there, and I was very honored and humbled to hear so many stories from people that came up to me before, but also after my presentation. And so the folks that are listening today that were sharing their stories with me, I'm very thankful and I'm very humbled by the experience. So thank you very much for being there. And I'm sad that it was so short. Like, I wanted to talk to everybody probably for hours longer, but it was an amazing event. 30 seconds left on the second follow-through bar on double bottom 22. Starting to look better. Bears are out break even on 21. So they sell the 21 close, they sell the 21 high. Somewhere in the midpoint, they out break even. And so during 23, they sold the high. During 24, they got out break even. So when you see that, now that you know that the bulls are in this swing, that the bears are out break even, we need 25 or 26 to do something bullish. Thanks for the comments. Yeah, it was very short. I think a lot of people physically met with the term Dutch directness, right? Ask me a question. Is it smart that I'm doing this and this? No. So there were a lot of people trying to reach out and talk, and I was very busy. So I apologize for being very direct sometimes, but there was just a lot of people to talk to in not enough time. So definitely look forward to repeating that in the future. All right, 24 is the start of a second leg. Will it trigger above 24? You can see that the dynamics has changed, right? This went up much quicker than this is going up. So we're in a trading range right now. This is the lower end of the trading range. This is the higher end of the trading range. A little bit above the trading range, we'll probably come back into it. A little bit below trading range, might actually have to test the bar 1 midpoint before going back. You can also look at the high to 54.41 and then an equal distance below 54.41, right? That's a magnet, so it pendulums, it swings around the magnet. So if it goes just as far down to 54.41 as it went up, it's coming exactly at the midpoint of bar 1. So as I said, bulls are buying 22. They're reasonably happy with 23, right? It's not a rocket ship. They're reasonably happy with what they saw happening during 24, that the bears got out. But 25 should be really continuation and should really go higher above 21, and it's not doing that. So some bulls are already deciding that if 25 closes like this, that they'll get out, break even. Other bulls will give it another bar, for example 26, to decide on that. And why is that? Well, look at other double bottoms. I think we recently had, well, you can argue this is a double bottom. It's not exactly a double bottom. You can argue that this is a double bottom. So this and this, or this and this. And let's get a better example. I need something that pulls back into a double bottom. I haven't had a lot lately. Well, here, maybe. So if you have a pullback like this, what you want to see is something like this bar, right? A big follow-through bar. Or here, that you get maybe one hesitation bar, but that the next bar is just everybody's in agreement that we're going higher, right? That's what you want to see. And that's not what we're getting. So at the 25 close, I think a lot of bulls will try to exit break even. So a tick above 22. But bulls are feeling that this swing long is starting to fail. Even. So a tick above 22. But bulls are feeling that this swing long is starting to fail. It's still valid. You can argue it's got a bull entry bar and a bull follow-through bar. 25 has a nice tail. Looks better now. But some bulls will not wait and exit a tick above 22. So that is here. You see that the bears on the 50-minute chart are getting out break even on the close. So that is that bar 21, 21 divided by 3.7. So it is a 50-minute bar close. And bears sold it on the 50-minute chart. They sold more higher and they're getting out break even. So if I see it going up now, then I would actually argue that it's going. But if this keeps happening, 25, 26 is a bear bar, then we're going below the double bottom 822 and 922. If we break that low, we'll come right back to 5431. Still think we're going at least to the high of 22. We're touching 5441 probably again. So the bears that are scalping around 5441, when it went up, they sold at 54.46 and they sold at 54.51, 5 points higher, 10 points higher. They offloaded their shorts when it hit the target. It went again to 54.46, so they've been selling again for 5 points, and they'll sell again for 10 points, but it looks like probably this time they're only going to get 5 points. Bulls are still long above 22. They don't like what's happening here, but they'll probably get the chance to get out break even. And another bull signal bar, if it's higher than a tick above 22, will probably be bought by the bulls as well. So it still looks good for the bulls, but a new high is where bears will be selling, right? If you get a double bottom, that's basically 100% retracement of the last leg. That is not what a bull trend is, right? So that's what a trading range is. And so new highs in a trading range will be sold because of the fact that it's a trading range, and will probably then get back into that range. And so if the bulls now get a new high of the day, probably here 54.58, and at the highs is where bears will be selling. You can also look at the gaps. Probably these gaps, I mean, this is a possible gap that might stay open, but all of the gaps here from the 6 low to the 14 high are closed and will be closing. So this is not going up in traditional bull trend style. This is going up in trading range style, right? 1 leg, 2 legs, pullbacks, deep pullbacks along the way. Alternatively, we just go flatline on 54.41, and probably the distance to the measured moves and the magnets will be smaller as we get closer to FOMC, and then the last couple of bars or the last bar right before FOMC will just be completely flat, right? As everybody's exiting their positions or everybody's positioning themselves for the news, that will be important event, I guess. Still think we'll go higher. The entry point for the 50-minute chart is here, 48 here. And this bar on the 50-minute chart didn't trigger it yet. It has 3 minutes to do so. Bulls break even on their, oh no, not yet, sorry. Bulls break even on their buy above 22 if they want. Almost, one more tick. Bulls want to see a big bull bar closing on its high above 25 for a new high of the day. So you can argue if we now go below this double bottom, no bulls are getting hurt, right? Because these bulls have taken their profit. These bulls were out break even on the midpoint. These bulls bought above 18, they got out break even. These bulls bought above 22, they got out break even. And so if we now would come down, then there's no bulls that would be shorting because of their trade going bad. They actually already had the possibility of getting out of their longs before. And so you don't see a dramatic bear bar if it now goes below these double bottoms, because there's not a lot of bull selling, right? It's just a bear selling. There's no trap, if you want to call it that. So sell signal bar 27 for the high of 2. Can the bears get another 5 points selling 46 to 41? 46 to 41. I don't know if everybody got a fill. Maybe we need to go one tick below the 41. So you can see how we reached that again, right? And so bears have gotten 15 points, scalping back to the 5441. Bulls have got 20 points, buying above 2. And so bulls and bears can make money in every market like this by using magnets and swing points. So at this point, I don't believe that this is a measured move target all the way down to a new low. If we break, then we probably have this as the measured move target. So 48 high to 39.5 low ends up being somewhere here, too high. The bulls will defend, of course, here this double bottom. Reached also the moving average now for the first time. So with the double bottom intact and a bull signal bar closing on its high or reasonably close to its high, they'll buy again for another attempt, right? They bought above 18, failed, they got out. They bought above 22, it failed, and they got out. So if they now get another signal, they'll buy it. But if this is another bear bar or a good entry bar below 27, I don't think a lot of bulls will be very aggressive. But if 28 becomes a good bull bar closing on its high bigger than what it's now, then with that stop in place, bulls will still try. A lot of days have a magnet like this where we're just hovering for bars and bars around it. If it's a strong magnet, it's typically something on the 15 and the 60-minute chart. On the 5-minute chart, it's a weaker magnet. And so it gives you a lot of trades. It gives you the long, it gives you a short, it gives you a lot of information. The trick is, of course, to find those targets. And in this case, we got them before the market opened, right? So I had this line in there at least half an hour before the open when I started the session. And so if you weren't in the session before the market opens, you might take the recording to see how I draw that measured move. You can also see it on it was on the 60-minute chart blowbacks. I moved it so it's not as precise anymore. It's actually here. So you have a range here for 4 days. And so Tuesday, Monday, Thursday, and Friday. You have this range going sideways. So you take the lowest extreme of that range. You take the bear bar high of that range. You see that today was trying to break out from it. And then basically during this hour, the breakout was confirmed. Measured move from this low to that high upwards is 54.41. And then what you'll see is that the next couple of hours will oscillate around that measured move target. Okay, so no bull signal bar, so no bulls trapped, but bears taking over the show. Can they break the 9 and the 22? Again, there's not a lot of stops there anymore because I said the bulls have been able to exit from any buy signal, and so there's not a lot of bulls that will be trapped here. If bulls are trapped here, you typically see that with big like this, right? If bulls are trapped, you typically get something like this, right? It breaks below that low, and then it just immediately sets the measured move down, right? So here, because there were bulls trapped, okay? And so measured move is then immediately the effect. No pullbacks, just goes there directly. And so in this case, you don't have that, right? Where's the stops? There's no stops. Because if there would be stops, we would be here by now at 54.34, 54.32. There are no important bull stops there. In fact, there's probably bears exiting here and bulls scaling in below the 54.41. Can we still get lower? Absolutely. We can still go to this range. We can still go to the 2 high. We can still go to the 1 high. We can still go to the open, but this is not a trap. So markets in a trading range, markets oscillating around 54.41. That's probably the happy price for FOMC, the neutral price. And as we get closer and closer to that news, we'll probably get less and less movement. And so you'll be entering a trading range of like 6 points, 4 points, where we're just oscillating. Now, what we now probably want to look at is, can we get a high 2 on the 15-minute chart? And so right now, the 15-minute bulls are so 15-minute bulls that bought the close here. Let me just get the full chart. So you buy the close here, you get good follow through, or you get a little bit hesitant follow through, but you want to get to that 55.75. And so you buy the close here, you have to buy more lower to get our break even. That's what you're doing now on the 50-minute chart. You can see 43 was the break even. We just hit 43.50. It was a little bit lower actually. So the break even was 42.75, and so we hit that. And so these bulls are waiting for another bull bar, and they'll buy it, and then it's a high 2, right? This is the high 1, that's the high 2, and they still expect, and on this chart, rightfully so, a new high. So what we can see now is that we have not a strong bull bar anymore, but I want that to coincide with at least buying above a bull bar on the 15-minute chart. Right now, I think because we failed this double bottom, we still need to wait for a stronger setup before taking a long. Now, what would the bears do that sold below 27? Well, they were reasonably happy with 28, not really, but they're really unhappy with 29. And so a lot of bears will exit break even, right? So you saw one tick below 27, a bear bar closing on its low, you get 29 instead of a full breakout and measured move, and so you'll exit. Okay, so the bulls are flat, the bears are flat, market's probably just going sideways here. 60-minute chart forming a small bear bar, so that will still continue and try to become a bull bar. 3.5 minutes for this part to close. This is starting to look much better. A high 2 on the 50-minute chart. And so if you're buying above 29, you're buying on the 5-minute chart. But if you're buying above 29.30 together, you're buying above the 50-minute chart. And so higher probability. What would now be a measured move for the bulls? Well, that would be the 29 low to the double top 24.25 high, and that would be 54.54. Good bull signal bar and bull entry bar. Tick above 29 would be entering on the 15-minute chart. High 2. Bad entry bar. So here is probably your entry for a long. Tick above 29. But to me, it looks as if we're just gonna hover around 54.41, and we actually might just go down and test this. For the FOMC, we could come up for a second leg up on the hourly chart, so that would take us to 54.76 area. Alternatively, it comes down and it just goes and tests 53.90. But probably better to stay out of the market and at least wait for a bar or three before making any decisions. All right, I'm going to sign out. I'm going to be back next week, Thursday, in the trading room here. Till then, everybody take care. I'm going to step out and Rose is going to take over. Thank you, everyone. Talk to you soon. Bye-bye.
Good afternoon, everyone. This is Rose. Right. Hello. All right. We do have a support here at the moment. You have one follow through. First leg, pull back, second leg, pull back, third leg, and a higher low 31, but it's not all that great of a bar to buy. Let me get my, yeah, but they're probably buyers. So here's our first leg with 29, 30, pull back 31. Bulls trying to get a second leg from above 31. 31 is the pullback, also this possibly the start of the second leg, but it needs to go one tick above to start the leg. So we had this breakout bar in 8:30. News came out, CPI. I measured it and I was long. I took profit here first and then extended the profit taken into 200%. That's where I took profit. It went above quite a bit. I mean, when I say quite a bit, it's basically less than 3 points. And I took profit there. So I've been selling ever since. This is the 15-minute chart. We are hovering above 166%. So that means it's still holding. And now I want to know if there's a trading range here. We might need to go test. So basically what I do is, right here is your resistance. Okay. And that's the resistance. It's a flag. It's a bull flag at the moment. Market wants to test these highs, but there's also smaller trading range here, very tight trading range. We might test around this area, but only to come back again, come back down. So is the second entry activated, triggered above 31, but it's not a good buy signal bar. I don't like to buy above strong bear closes. That it closed kind of on its mid-level, so it's not all that strong to begin with, bar 31. But bulls bought it anyway. Now, they need to close a pull body above 45, 54.45. Then they're going to have their chance to bring market back up to the high of bar 23, which is about 9 points, and 1 point above bar 23 is 10 points profit taking. Yeah. So it looks like market is trying to go and test the 23 high, possibly slightly above maybe, but it's sellers, early sellers are there. So it's around 48 to 49. But they need to first close this bar above 54.45. Failure to close, then we come back down again. That means is this fails and we start to sell. There's a head and shoulders here, but I think we're just too bullish. So you got more than 20 bars to the EMA. So this is the first touch of the EMA. They buy. Is buyers immediately entered at the EMA and above bar 29. So they want to test this area probably, but I'll know if the bulls really want to keep moving up, then once they close above 54.45. Failure to close above 54.45, that's going to be bad for the bulls. But it's kind of a midday, not really. Midday is, for me, is from basically from bar 30 to 40. You could get small 10-point moves there, up or down. But then I look for swing, more than 10 points, about 20 points. That's with bar 48 and 50. So, so therefore, this is the first half of the midday. So it's possible that we could go 10 points or 9 at the best. But bulls failed there is with bar 32, and it's a classic FOMC before the FOMC price action. Anyone bought above bar 29? Stop is around 54.37.50, and they're hoping to get a 10 point out of this upwards, but let's see if we can stop the bears here and not move underneath the EMA. Small inverse head and shoulders for bullish reversal still might be in play here. Market is basically in some kind of a bullish day today, but I don't know if they're going to be able to sustain it. So I don't want to see bears moving underneath the EMA with consecutive bear bars. And I also don't want them to gap below the EMA. Very bullish start from the is open, and we gapped up, have wedged up, and coming back in with some kind of a trading range. When you have something so bullish trend, trading range is expected. Bears see a double top there, is nice leg down, but there is no gap there. Okay, so I don't know how bearish this is. We could still trap those bulls underneath the EMA. They got a bear flag there, failed, bull close. They tried again, is another bull close. So you got to now double bottom at the EMA. But strong close. Okay, so we have now our first bear bar close below the EMA. Bears want another is bear close to start the move down further into this gap. There is a gap here. We might end up testing this gap if bar 34 closes bearish, but it's still a bull market. So it's difficult to sell, and you're in the middle of a trading range here. So you sell, you could get in trouble. And right at the EMA. But 33 is very promising, and they want a follow through, probably sellers underneath now that it moved underneath the EMA, but you're selling into this gap. So there will be buyers there. How can market move? Yeah, I mean, it could move down. You see, this is where we are at the moment, is going sideways. We could get this, even a much bigger bear flag, and FOMC could be bearish, but only to reverse this back up. So you're gonna then look for a second leg down with FOMC, right? And that's the first part and the second part. And then once the speech begins, Powell reverses the market. So it is possible that could happen. Similar situation here. Similar situation here. Let me get this out of the way. All right, going sideways underneath, but look, bars are clinging to the moving average. If that's the case, there's a gap here. Eventually, they close that gap, right? So you expect leg or two down. Here's a leg, pull back two, and then bulls take over. Head and shoulders, inverse head and shoulders, but look what you're buying into. So that's not going to work. And it comes down. Tomorrow, it could sell more and test these lows before reversing back up. So that's FOMC right there. Bars are clinging. It tries to go up, makes a new high, and then comes down, right? But that right there is your second sell. Here's the first sell. Here's the second sell, and then the FOMC. This bar closes below its midpoint and then how do you know? If you sell the close, you could be gambling. I'd rather to put a sell stop underneath and wait to see bearish pressure. This bar right here is the bearish pressure. Why? Because it filled the lower wick, right? That means it's coming down. Even though it goes sideways, that's now creating a bear flag in the form of a triangle. That's going to get another leg down. So what I generally do is I measure this leg from the starting point to the ending point, okay? And then I look for breakout targets. We hit one or two of those before getting a measured move, and then it reverses, and generally I take profit there. If I see a strong inside bar, after taking profit, if I'm still holding into this, I see this bar, I exit above it. And I wait for it to go up, try to get a low one. Low one fails, I could buy into that fade, and then I can go long. So here they try to get a low two, failed. Then they get their low two here, right? The first sell, second sell, the bears make money. Anybody who got stuck there because they were still holding, looking for a measured move down, now get a break even by selling underneath this bear bar with the second sell, either that one or this one. And then they exit. Because they exit with their break even, market reverses back up. So there is another one there. See, I didn't sell anything because there is no second bear bar there, and this is still support. Market gapped up strong enough and then comes down to EMA. It does move underneath EMA, but clinging and sell failed because you have 1, 2, 3, possibly 1, pull back 2, pull back 3, double bottom, and then bulls show up. But the whole thing ends up becoming a bear flag regardless, 1, 2, and 3, or 1, 2, and then later on with FOMC you get the third leg. Third push up, but it's really a expanding triangle, right? So market created expanding triangle, test 1, 2, 3, 1, 2, 3, right? Apex, so the expanding triangle, we are above it. Buyers are buying, so you look for a second entry long right there. That's first entry, that's second entry. Look for prior highs to be hit. Not a good buy. Signal bar 34. So it's difficult. We went above, we went high, and if anybody bought underneath 32, they got a break even there. So now if this bar closes bearish, we could continue to come down. We're probably going to try to test the 29 low. Some just gap into this area if bears can close that bear bar. Fading is basically, say bears are selling is into some kind of a support or with second leg or break of a trend line. And they're assuming there's a breakout there, but it's not a breakout. They're getting trapped because bulls are fading that move up. They don't believe that it's okay to sell. So all the bears are doing there is just scalping. The rest still holding their positions are getting stuck as the bulls are rejecting that move. So they're betting against. So let me see. Like they tried to fade here, failed. Right, so you have a trend line here, first break. They try to fade, right? So what does that mean? So that means if you're not getting follow through bull bars and not able to test the highs, right? And then that bull bar is the fading effort by bulls and its low is being taken out. That's because bears who sold the close are underneath 15 want another leg down. They get their leg, but now they can't continue down. So the bulls now bought this, okay, or bought the close of 15. Stuck here, they're buying because they see a limit order market. They're trying to get to a safety. They did. Once they exit, bears sell again, make money, but they can't get follow through. So there's a bunch of fading effect happening there. But bulls tried several times to get back to the highs, failed. So now bears take it over first time and the second sell. But we're just going sideways and down. Bears trying to move underneath bar 35 is they're trying to come down and test the 36-35 area, which is inside the bull gap, body gap with 3 from above bar 2. But you do have a wedge bottom and a double bottom, slight higher low. Bulls are still trying to reverse this, but this bar is very strong, 35. Probably we need to move underneath and test its low. Market could come down to 36-35 area before bouncing again. Because this is basically how they see this as bear flag, right? So you have kind of a double top, lower high bear flag, but it's sideways. It's a trading range. It's now it's not 20 bars yet. I guess it is. Actually, it is 15, 25, 35, right? So it's 20 bars already. Needs to break out at least a little bit. So I'm looking for now bears to get another bear close here, 36. Because 35 is an outside down bar. At least come down to 36, 35 area, see if they can make it. Before the FOMC, I'm going to take a break and get some lunch eventually, because I didn't take a lunch break now, but not at the moment, so I'll just stick around a little bit. Let me take a look at the news. So that's 2 o'clock. Yeah. And then the 2:30 is the Fed chairman conference and speech and the Q&A. So here's a bullish case for FOMC. Market is up and up and up, 20 plus bars, first test, clinging, and then goes up, comes back down. Still, it's a expanding triangle, but bullish, so probably we're gonna break out to the upside. Even though we come down a little bit, but remember, there's a gap here. That gap holds, and then we get an expansion to the upside. Really strong consecutive bars means we're gonna get a spike pullback channel up, And it's a tight channel means you should be buying even any bear bars or above bull bars. Yeah. So let's see. I did sell the pullback is at the EMA because of bar 35. I didn't want to sell the close. I wanted, because it's so close to the EMA, I just put a limit order there. So I entered. So I'm looking for market to come down a little bit. I don't know how far. Possibly the test of 6 low or 5 low, which exact identical lows anyway. If it's going to fail, that's where the gap ends anyway. So here is the gap. Okay. Can move into here. Bulls want to keep the gap open, obviously, but it would be nice if we can actually move in here and then reverse back up to the EMA again. 2 bear bars, 2 closes. The market is trying to become always in short, but it's kind of difficult. So even if we come down, I think the buyers are in this green zone. They see a wedge bottom with 22, 29, and now we have an outside bar, so it's low. They see a wedge bottom here. If this bar closes outside up, I will be exiting where I entered, which was my limit right there. Bar hasn't closed yet, so as it comes down, I'm still slightly green, but if it closes like that, I'm gonna exit out. Bulls want to break this trend line and go and test the 23 highs again, like they were trying to. So they bought again. I don't know how many points, but they might be already scaling in. That's not even 5 points. Would have been better if we actually come down around and tag this area before going up. So without a bull bar, I can't really buy anything. And you're trying to buy against 2 bear bars, 35 and 36, close below EMA. There are limit sellers there. Anybody who already sold at the EMA like I did, not very pleased with this bar, trying to become an outside up bar. They're selling again to break even or make a little bit more, but this is not a good sell signal bar. I said 32. Bulls need to wait about 5 points to buy before, so that means we might need to test this area before buyers show up. So I don't want to exit this short yet that I sold from the EMA, because it still has a potential of giving me what I need. It could come down to 35, 25, 35, 50 before bouncing, or it could literally test 35, 54, 35, and then bounce. Now, institutional machines are waiting at the 1 tick above this 34.75. So we might need to come in there and test there, depending on how this bar closes. All right, so it didn't close all that bullish, but it also didn't close bearish enough. But you could see how they sold again at the EMA and made money. So now they won't follow through because it is basically another bear flag. It's kind of a small pullback bear trend they're trying to start, but still there are buyers waiting 5 points below bar 32 or at the institutional level, which is 54.35. Could be 1 tick above or 2 tick above, but they're there. We're smack in the middle of this channel. Okay. Just trying to make a decision. If you put the line, is we have two bars already closed below the midpoint of the channel. So bears want to test this area, maybe even get a quick breakout, only to reverse back in. Bulls want to stay above, close another bull bar, stay above the mid channel and go back and test the high. That's why it's very difficult. Either you sold at the EMA and looking for a reward, or you do nothing. You're in the middle of nowhere. So you either sold and you're looking to collect, or you are flat. But it's just not doing what it's supposed to do. It's lunchtime, it's middle of the day. We haven't really tagged this gap. Bars are clinging to the EMA, even though we moved underneath the EMA, but they are clinging, so it's not like we separated from the EMA. There's no gap down. And then there's a major support here, buy zone. So you see why we're going sideways and they can't sell quickly. Yeah. So for failed is if we do start to get above the EMA until the FOMC and we make a bullish move, something like that sideways but not taking out the prior highs, and then the FOMC becomes bullish but it fails, right? The first two bars are dojis basically. You're not getting a really good follow through buying. Then we get a double top there. It's also 1, 2, 3 and a double top higher high, and it just reverses. It creates the head and shoulders pattern, left shoulder, head, right shoulder, neckline broken, really strong bear bar. I would sell underneath that bar, looking for several. Here's the first flag, second flag, third flag, fourth flag, and the market continues to sell into the close. That would be a really good afternoon if we can get that. I would love this. It would be so nice. So if you guys want to take a break and just go get some lunch, nourish your body, maybe go for a walk, come back later, now is the time to do so. Because this is all machines trading at the moment. Hear me? Can you hear me? Can you hear me? No, I've lost connection again. What is going on? Seriously. Just give me a second, just things are not updating on my chart well enough. Or fast enough, I should say. Here we go. We are now above that. We are now above that channel line. I've exited finally. I took a little bit of scalp there. Didn't really like the way the 37 closed. Okay, held it a little bit, made some money, what I was originally making. Then this happens. I'm just not going to linger. Bulls keeping the gap open, so we're back to the top of the channel. Second leg down from the EMA. I did say that we're clinging to the EMA, so that is not a good sign for the bears. Although we have a little bit of gap here, but now everybody else is stuck. They're selling higher. But I think this is done. So the market is now trying to get above this trend line, right? So we have 1, 2, 3 touch. they're trying to break above is trying to get back to the 23 high. Above is trying to get back to the 23 high. But I think I'm done taking trades at this point. I'm going to wait for FOMC event. Here's how we could get a bear trend is if the FOMC goes up and then suddenly is we get this. Okay, you have an expanding triangle and then pull back. That's your first sell, second sell, bear flag really, or micro double top, and then that's a bear bar. And then you get this, that's your breakout leg down, so expect another follow through leg, even if it goes sideways, and then we close in this trading range. What about FOMC sideways for a while? Creates a bull flag, but eventually we don't have this. We didn't move underneath the EMA that much. So we're getting this already. But you can see right here, that's the FOMC. It's a doji, goes sideways a little bit, then breaks out, tests the high, fails, comes back down, right? Not taking the highs, no breakout bull bars. Comes back down, it's supporting here. FOMC being a strong news event, news bars only respect support and resistance, supply and demand zones. So is you got a resistance there, is you got a support here. So it goes in between, and then the 230 event, the second part of the event begins, and we get a breakout, bullish breakout. But it doesn't go too far. This was not a target, it's just marking the midpoint of this level or the zone. We're back above the EMA, but you're in a trading range, okay? So there are probably sellers here, but really good bar 39. They already bought above it because it's the second entry long, even though we made a new low. It's the first entry, second entry. They're targeting this high and then the 23 high. But when you have several legs coming down like this, even their one bar, like here's a leg one, pull back, leg two, pull back, leg three, this small area is a sell zone. I mean, you should be able to immediately put your sell zone from there to there. So we are testing that. Right? So if you did buy above 39, you kind of have to take profit there somehow. Look for a pullback and then buy again. Now, that's a really good sell signal bar. 40, that's midday, is possible. But where are you reversing? In the middle of a trading range? Not a good place to reverse, right? So anybody who's selling here may not get a good traction. But that's a profit-taking bar. Some did sell underneath looking for 3 to 5 points. Remember, those who still were selling into this area, they're looking for a resistance to sell again. So those bears sold again there. They're looking for a resistance to sell again. So those bears sold again there. There are no 2 consecutive bull bars. I don't know if the 39 low is going to hold, but it is the support because it kind of broke out. So if you're selling from underneath 40, buyers waiting at the open and the low of 39. There's a really good video, actually several different videos in the course, which is towards the end of the course. One of the last, I think it's the last module. It's the scalping. Literally, Al Brooks goes through bar by bar in this manner, in this setup, where the limit buyers and limit sellers. It's long. I mean, the videos are long, but They are, every second of it, it's worth watching several times, in fact, that you kind of learn where the buyers and sellers and why you should be scalping. Here's a gap up. That's a gap up, and it goes sideways, moves underneath the EMA briefly, and then goes back up, comes back down, and then the FOMC is a one big bear bar. But look what it does. It stops right at the support, right, which is also a magnet, yesterday's low. Support and resistance will hold, and then it reverses back up to where bulls were still buying. They thought that this was a small pullback bull trend. They buy at the support, bring it up, but now you have a big down, big up confusion. But you do have the second part of the FOMC rolls in, and you get a huge sell. Why? Because anybody who was selling stuck here, they sell at the resistance, and midpoint is break even. That's why you get that big doji testing that area. Those bears made money eventually, somewhat, and then it goes back and creates a bear flag right there. Beautiful bear flag. And you also have a measured move there. So I would take it from here, here. That's your measured move, but then you get, I mean, I'm not measuring all that great, but there's 2 times the measured move, in fact. You can also say right there, just stop there. It's about just about 2 times. Or you can say, nah, that's not how I'm going to measure. This is the breakout. That's it. So now you're looking for a measured move right there. It's either or. Here's a really bad FOMC breakout, but look what just happened here. Go back up, and then the FOMC, we go sideways, but creates a bear flag, right? So it's high 1, high 2, high 3, high 4, high 5. What is high 5? There's no such thing, high 5s. Therefore, it must be a bear flag. And then it comes down. Look at the ATR. You only have 2.5. So if you actually sold from underneath here, you're looking for a 5 point. You're probably not going to get it. All you have is a 225. You barely made it, right? So you sold right there. And then they came out and closed, and then they bought it. They bought this, but first it came down 225 and then went up. So anybody who was looking for a decent scalp, they knew they could only get 2 point there, right? And that's what they got. And I said probably at the open or lower, buyers waiting, or you could say lower third. Bad buy signal bar 38 is probably we have to go test it, so we did. So really, my buy zone was from there to there, and we just, if you find the midpoint, we tested it. That's another confluence. We'll see a bull flag, so they're trying to resume it and go back and test this zone, break this, and go up there. That's not how I would do. Here we go, they're breaking out. Bull's trying to get above 54.45 again. So we might need to go and test it. Might even break above and go test the 46. 54.46. I bought above second entry long. New low with 38 low, first entry. Second entry, 42. I bought 1 tick above it. And I am long. Want to see if we could tag that 45, 54.45, and get above it. 23 highs always been my target in this leg, but they failed as a double top bear flag, and then they failed. So now bulls are looking for a reason to buy and go back to the 23 highs. First sell, second sell, so they're trying to break this resistance. But it's a small trading range, it's the highs. We should breach above or test above 32 high. So somewhere around 54.45, 54.45, 50 at least. But it's a small trading range highs, so bear machines are trying to sell the close of a strong bull bar. That is the second leg up, but the bulls probably want another leg up. What about making a double top here with this and then come down all the way? That means bears need to take out the 43 low, close below the EMA. They see a wedge top here, 37 high, 40 high, and 44 high. But they had their chance to sell, and they failed with 41. So the market is trying to break this small resistance and get up to here. But it is there's an hour left to FOMCs. I would really recommend you guys to go get lunch or something and then come back. Later. I'm going to take lunch in a few minutes. Lunch, maybe like a half hour or something, and then come back way before FOMC. Bulls still pushing, still waiting for 54.45. Test, maybe higher. Yesterday we were bullish. We had a bull flag, so it's not the most bullish day, but you could see bull big down, big up, but we took out that high, so that comes down. Because of this leg up, it creates a bullish pressure. We get the bull flag, we take out that high, and the market continues, right? And then we come down a little bit, but yet another flag, and then the market is bullish. So today, if the bulls can actually get a follow-through breakout, we could continue that. And tomorrow could be even another bullish day. So but we are in a trading range at the moment, and we haven't broken this resistance yet. Because I said it's probably a trading range, so it's just going to try to reject, but I'm looking for bulls to try and go and test the 54.45. We take out the 54.45, market could continue to go up. Somewhere here, and then we come back, and then bulls try to buy. So something like this. Sorry. Okay. So market is doing this basically, trying to go back, but that is that red zone. I have it. And then we come down. We have 1, 2, 3, right? Kind of truncated. And then we get a FOMC bar, bullish, follow through, pulls back. There's a small wedge bull flag, 2 bull bars, so they're going to buy it. We go back up, but then you get this bear bar, not a good, it's just a breakout. It's not all that strong, and it's not getting good follow through. But that's kind of the before the end of day. And then we reverse back. Why? Because we stayed in this trading range. even though market was above and then came down, that is magnet, basically. This balance zone is attracting it back, attracting the price back down. But where do we go? We test into this gap area, and then the buyer showed up. And the next day, we are bullish once again. So there's FOMC, and then there is the next day, the post-FOMC price action. So, okay. Okay, so you buy above 39, right? And then you said that you put your stop below 38. That's fine, but the problem here is that you're buying into this mess, okay? It's a trading range. There's not much of a room up there. What you do, right? So you wait for pullback. So if you bought there, your stop is there, right? So you're looking for a 1R. Now, we pulled back, right? And then buyers showed up again. So I measure from there. They're still trying to get up there. So remember I said 45 to 45 and a quarter is still target, could go higher. So that would be my 1R. We're about to test the 45. 54.45 is, I like to see a breakout above and breach above this and demolish this resistance. Remember I said the 23 highs that we need to test. There's a gap bar, bunch of gap bars. Bulls are trying to close above here. We need that bull bar closing above 45. We can even go higher if we wanted to. Bulls want a 9 to 10 point test. 9 point for bulls is 47, 10 is 48. So we can push into that area, which is a 23 high. Okay, I'm gonna take a quick break and grab something to eat and then be back. I'm guessing 20 minutes or so. Normally I start a lot later, but I did start early today, so just don't want to trade this anymore, and I'll see you guys. So what time is it now? Like a 1:45 p.m. 15 minutes before. Lost connection once again. Keep losing connection. Maybe this is my cue that I should walk away from my desk. Okay. See you guys soon. Okay, everyone. We are 8 minutes away from the release. You should not be in a trade. We just came back down to the support. So we're going between support, resistance. If the bulls do show up right here, we're definitely going to test this area. And then we could get a rejection from there as well, okay? So basically you have a 1, 2, and 3, right? That's leg 1. Maybe leg 2 all the way to here, and 3. Hang on a minute. Here's leg 1, here's leg 2, and failed underneath the EMA. Probably some sellers here, but we start to get above the EMA. There's a little bit of gap here. Bulls will close this gap. Now, why would they close it? Because you're in a trading range. In trading range, gaps close. So we could end up going right back up and testing right here. This is no more. You should have actually measured. As soon as you realize that we're no longer going beyond that 1 hour, and you get this outside down bar, you just measure it. That's your 1 hour, 1.5 reached. Now, if the bears do show up here, then we come down to the 2 hour. But still, there's also support right here. But this gap is still holding, so we might become bullish and go test this resistance. Okay, we don't need this, but you kind of got the idea. All right, so I'm gonna wait. On the weekly, okay, weekly chart, weekly bar is trying to reach this target, 63.50. We could easily get there, okay? But remember, FOMC can create a 100-point move up. So 54, 55, 50, or 50, 55, 40. We could, if we become very bullish, we could get to these areas. Could also say, don't think we're gonna get there. Maybe tomorrow we might actually reach there. So daily, we could reach 57, maybe further up and then come down. Or if we become bearish, then we're going to break this area. If we start to get bear bars, closing the gap, body gaps, I'm going to look for more selling. Okay, bears trying to get a double top at the EMA. But the moment we close this gap, we're going to test that high. We could test that high, then come down, and then bulls can show up. And we'll see. If it's just a small doji and we end up going sideways for a while, I'm going to wait for about 15 minutes or so, or 20 minutes, and then I'm going to look for breakout bars. So there are two, right? 15 minutes, 10 to 15 minutes after 2 p.m. is Eastern time. You got the first, you're going to get a direction. And then 2:30, I wait another 10 minutes or so. 2:30, if we're selling into 2:30, is market could reverse around 2:30. If we're buying into 2:30 p.m., market could reverse also there. So be careful. Is we have a good reversal area. It's a bit of a trading range situation. Market wants to come down to open of the day, test it, move underneath. We already broke out. So if we do come down selling, we could actually reach back to this trend line, which is expanding triangle trend line. Okay, but that has to sell really, really strong. That means we would get a measured move target to the downside to here. Only if we get a lot of bear bars closing this bull body gap. Is we don't have that. For bulls, we end up going there. All right, either trade small with micros, maybe just 2 micros, and then wait for direction, then switch to E-mini. Or if you're trading with E-mini, it should be just only 1 contract, but that could even do a lot of damage. I'd say wait a little bit. Sometimes data delayed. Oops, wow, okay. Whew. They just closed the gap. They might be wanting to come down to here. Here's your initial measured move target, but it's a news bar. It could trap you, but if it closes on its low, they already reached the measured move right there. If it closes on its low, it's going to come down to here, possibly even here. But it is now trading range. We're testing the trading range lows. They're trying to close a bear bar. If it does, if the next bar is not an inside bar, we could continue to come down. But I'm not trading this. is it's going to go up and down. It could trap the bears right here because it's a trading range. It's breaching the trading range low, so that's manipulation. Might need to go up and manipulate right about here, or it's just going to close a bear bar and it's going to get the 2R right there. I don't know what it's going to do. So is we get a nice bear body, we could get inside bars into EMA and then make a bear flag and sell. So this is not my bar. I cannot trade this. I won't even touch it. So because I could be a roadkill in a matter of seconds. You have an outside bar, inside bar combo, 49.50. Bears got a breakout, but it's not an official breakout. It's actually a breakout of a wick, not the body. Therefore, you don't have a bear breakout here. It could reverse and go and break out from the upside of the upper end of bar 49. So I'm just waiting for this bar to close and give me some direction. And you're not going to get that direction right away with the first bar. You might need to wait for 10 minutes. Remember, I had this range measured right here. Look where we end up coming down and testing, which is support, right? So that's the breakout point of this ATR body, bar body. Look where it reversed. So it's not coincidence because that's where the breakout was, which created support for bulls. So it comes down, tests it, it's trying to stay above it. Now, it has to not only stay above this level, it also has to close a bar body above the Globex high to go higher. Otherwise, it can come down into the 50%. So you have a trading range. If you measure this trading range, we're right at slightly below the 50% of its level, of its range. We have already a bear flag here. This is the so we reached the 200%. We're bouncing. I also do not trade this bar. Because if the bears actually fill this lower wick with a bear body, we will get another leg or two down. So bears need to show us either strength here and momentum, and that means if this bar can collapse and close somewhere down here bearish, that means sellers will show up. If we get an inside bar, that means target is right there. That's 1R, but the bar hasn't closed, so I don't know. But initially, I can measure this. That would be my risk. That would be my one-time reward, and 2 times the risk. So bulls are trying to reach back up to here. You already have leg 1, pull back leg 2, or some see this as leg 2, but we didn't take out the 49 low, so this whole thing is leg 1. Pull back 52, 53, 54, second leg. We might need to get a third leg. So that's half R plus. We're not closing above it. I might need to remeasure it for bulls once this bar closes. I measured this prematurely because the bar hasn't closed. You cannot expect price to go there. It has to close first. I'm just showing you what I would do. That's why I wait for the second news bar to close. So I'll move it for now. So it's possible that we could do this if we could get this leg down, then we would get inside bars, then this would be my initial, right? And then I would get 1R, 2R, and then pull back and see if they can buy again. But I don't know if that's going to happen. I just have to wait for this bar to close. All right, 2 more minutes. If the bear breakout fails like this, look what's happening here. This is the gap body, right? We closed it. So there is no gap here. But if we get the bear bar, okay, we're going to sell more. This could be the target. So or this could be the target. So this is bearish. But if we start to get bull bars, then you know that they're going to try to get to the 1R, 2R. Then you could say, okay, it did close the gap, but closed a horrible bar and no follow through. That's a failed bear breakout. Then you look to buy. Right now, bulls are trying to fade. Bears, on the other hand, put a sell stop right there. So they're waiting for this bar to close, then they're going to put the sell stop there, and they're going to look for this fade to fail, and they're going to look for a bear bar down. They're going to scalp at the lows and then leave a runner for more. Okay, so now those sell stops moved underneath bar 56, but now bulls see a possible 1R target right there, and that's where they're trying to reach. They're trying to close this gap. Bears, on the other hand, looking for this fade to fail, and they have already sell stop orders moved underneath the bull bar 56. They're looking for some kind of a backdoor to enter. The bar closes bullish, then that's it.
Hey everybody, give me just a quick second here and I'll share my screen. I'll go ahead and open the question box and I'll answer questions as they come in. Just a few more seconds with the screen and I'll be able to share it. Typical FOMC day. Let me make sure the audio and the video is working. Looks like it is. Perfect. I had to update my Z book that I trade with. Had some issues that I'm trying to resolve, and therefore this computer, which I primarily use for the trading room, I had to trade with it. So I'm having to log out of several things and switch the platform over I use this chart for writing the blogs, this workspace, but I don't really trade with it. I watch it, I pay attention to it, but when I'm trading, I'm really just looking at a chart, just basically this. Large expanding triangle. For FOMC days, most people should just not trade FOMC days. I mean, you can just get absolutely, punished. And the reason is most of the time the bars are really big and you get sudden reversals. You buy up here at 52, you put your stop down here at 24, you're risking, 30 points, something like that. And maybe a little less than that. But the point is, your risk is really big. And for most traders are trading small position sizes, 1 micro, 2 micros. And if you normally trade 1 or 2 micros and you're risking 5 or 6 points, and now all of a sudden you start trading 1 or 2 micros and you're risking 20 or 30 points, you can really, really have a bad day. And the other problem with FOMC days is they're low probability events. And because they're low probability events, the issue with the FOMC is you get sudden reversals. And when you look at these on a smaller time frame, they're basically a series of parabolic wedges. So you look to buy up here, and you think the market's always in long, but look to the left. It's a parabolic wedge. 1, 2, maybe 3, 1, 2, 3. It's basically a wedge top or consecutive buy climaxes. This is pretty strong. What I did, I'll often look at basically a 100-second chart, which, pretty much a 2-minute chart. So what I was doing is I was watching this parabolic wedge, and for the logic of what I just mentioned, I made this really big surprise bar. Let's just flip to a 2-minute chart. It's easier to see. When I see a bar like this, I'm just selling at the market, and that's typically what I'll do. So I'll sell, at a target somewhere around here, 25, which is this low right here, and I ended up just closing the position right before it a few minutes ago, mainly for the fact of I wanted to talk in the room, and I only have one computer right now because my other one, I had to factory reset it, so I got to reload everything. So right now, I only have this trade station open, and obviously I'm not going to trade right now with this platform. Plus, it's 2:30, it's late in the day, and look at this. We're getting, by the time it's clearly bearish, what happened? 3 pushes down, 1, 2, 3, or you can say 1, 2, 3. I never worry too much about which leg. Is it right? Do you draw it here? Do you draw it on 57? I never worry about that. I just look for 3 pushes. And if I see 3 pushes, I become hesitant. So I'm in scout mode all through this. Buy small pullback, scalp out. Once you get 2 or 3 legs up, look to sell. Once you get 2 or 3 legs down, look to buy. And that's pretty much been the whole day. Apple. Let's see here. This is GameStop. It's kind of humors me. You go to MSN or Bing whenever I open my browser, and it's always something about GameStop. GameStop is just surging uncontrollably. That was one headline. And it humors me because I look at today, and that was the article released today. And I look at today, and it's obviously at $29. I mean, it went, crazy through here, but it's relatively calm. Apple, pretty interesting. Really, really big breakout. And, it's really kind of a good example of being short in a small pullback or tight bull channel. If you're short, you can just get a plunge to the upside. I don't know if this was earnings or, whatever it was, but either way, we had a strong breakout. Go to a weekly chart. We had a rally, 2 legs down, parabolic wedge, 1, 2, 3, failed breakout below this low right here. So reason, good area to be buying. This is obviously a surprise, but do you really want to buy up here? Probably not. I think this is climactic. I do think it'll go sideways. I don't think, is the market going to reverse over the next few months? Probably not. Probably go sideways, something like this, sideways, pull back. Well, the bears will need to develop more selling pressure. Again, for those of you that are just now listening, there's only one question so far answered, and I'm happy to answer more if I see more questions asked. I'll open up Discord as well. Euro dollar daily chart. I mentioned a couple of days ago that the euro dollar had a fairly strong gap down, big bear bar gap down, but then we went sideways here, and we ultimately ended up pulling back, closing the gap, which was expected. And by the way, the more you think about trading and the more you start trading, you start thinking about backups. Backups with your trading computers. I always have a separate computer, the one I use for the trading room, that I will, it's basically a backup. And if my other computer stops working, I've got my phone, obviously I can close positions or anything like that. But you always want to have some form of backup. Low one short, 74, but probably buyers below. Yes, it is in a sell-off. However, we're at the bottom of a trading range, and this is really not all that ideal. So I think buyers below, and we're probably going to pull back here. Now, as far as buying here, that sell-off down to from 71, 72 is fairly strong. And it's strong enough that we're probably going to get at least a small second leg. So it's possible 75 is a minor reversal. What about the bears? I think bears probably get out above 75. Odds are it's a second entry buy, possible expanding triangle, failed breakout of the 55 low. I think it's certainly okay to exit if 75 closes on its high. But remember what I said, low one, minor reversal. Therefore, it's possible there's buyers below 74 here, pulls back near 50%, maybe near 54.26, and then gets trend continuation. Most low ones have minor pullbacks and then trend resumption. So I do believe the bears selling below 74, if they're willing to scale in, are probably going to make money. And you see what happened? Let's take a look. The low of 74 is 20 even, and the high of this bar is 25 even. So what just happened there? If you're in Discord, what do you notice? The market went up 20 ticks above the low of 74 and turned back down. What does that tell you? That tells me that traders who bought the low of 74, let me back up. That tells me that traders who bought the low of 74, they tried to scalp out for 5 ticks and they didn't get filled. So, and when I say buyers below, what I'm saying is low ones often get a brief pullback. I think we are going to pull back here. I think the downside is probably limited. But as far as buying above bars, I'd really like to see a stronger reversal. The bulls certainly need a decent bull bar closing on its high. It's getting late enough in the day that I think most traders should just be done trading. If you haven't made, you think about it, if you're trading at this point, you really have to ask yourself why. What are you trying to accomplish by trading past bar 72? Most traders better off just letting it go and waiting for tomorrow. It's really easy to be frustrated by the day and do something impulsive and something that you might regret. By the way, I will host the end of day review in the trade room since I'm in here right now. I would get out a couple of points above 75. And as far as buying it, I'd let it go. And when I say I would get out, I mean I would get out of shorts a couple of points above 75. This is what I was talking about. 75 although it's a week, I wouldn't necessarily buy below it. Well, two things. One, let me fix this chart. So 75 up here. 76 went down, testing the low of 75 and up, creating a micro double bottom. But the point is, the reason I'm bringing this up, I would not hold short above 75 because there's too much risk of an expanding triangle and this happening. So look what's happening. All the traders who bought here on the close of this big bear bar, do you think they're going to make money if they scaled in? The reality is they probably are going to make money. I wouldn't be surprised if we rallied all the way back in here. Expanding triangles are trading ranges, and they're punishing for traders who sell too low and buy too high. That's just, it's a variation of 3 legs down. I know it's frustrating. You look at something like 71 and 72, and it's so easy to think, oh my gosh, I've got to get short. We're going to crash and we're going to fall for a measured move. We're going to test the moving average, the 60-minute moving average, 5,400. We're going to test the close of yesterday. I've got to sell. The problem with that logic is this. Here's what you're selling. You really want to sell that? What about that? You're selling, does that look all that appealing to sell? No. Of course it doesn't. So the point I'm making is, when I think of a breakout, I assess the strength of the breakout. Is it going straight down? This went down quickly. And from that argument, it's a strong breakout. However, it's a sell climax. And this could just be a sell vacuum test of support. The 65 high, the 66 low, 65 low, the 55 low, all of those areas are support. And therefore, what I pay attention to is when the sell-off starts to stall, like it is in here, what do? I don't want to be short. Now, I mentioned I was selling during this bar, and I was happy to be short as it was going down, but I was looking to buy back shorts somewhere in this area. And for me to stay short, I would need the market to break far to the downside. If it didn't, and this happened, and then that happened, guess what I'm doing? I'm exiting. Why would I exit? Because the bears selling here had a deep pullback, and they're going to be disappointed. And if I was one of those bears, I would have been disappointed. Doesn't matter where I entered. I'd be buying back my shorts down here. That's why I said this low one probably has buyers below. Even though it interestingly went 4 ticks up and then pulled back. 3 consecutive bull bars, probably buyers below 78. But again, if you're buying right here, do you really want to risk 15 points to make what? 10 points? And I just don't think the math's all that great. You're buying in the middle of the range. And there's only a few bars left. 5 bars left in the day. It's just not worth it. Traders, it's very common for traders to make mistakes by being impulsive. If you just look at your trading, most people, this is why I talked about, I think TradeZilla yesterday. Yeah, I like using that. And, I've always done a version of that with, an Excel spreadsheet. And the point is, what I like to do is pay attention. One thing I do all the time is I take a list of trades over, a week, 2 weeks, 30 days, 2 months, whatever it is. And I take the list and then I just categorize. I basically sort the P&L of the trades. So I immediately look at my biggest losers of that time period. Now, why would I care about the biggest losers? I care about them because I want to see, are there any outliers? Are there any losing trades that are significantly bigger than any other trades? If my average loss is $100, I don't want to see a $400 or $500 loss. And, in other words, I don't want to see a loss be 5 times bigger than an average loss. And if that's the case, there's probably something I'm doing that I need to stop doing. And so it's what Al talks about. Most traders have enough winning trades to do really, really well. The problem is traders end up taking too many bad trades. Your issue is not the quantity of the trades you're taking. It's the quality. Focus on focus on avoiding stupid trades, just like Al says. Stop selling at the bottom of the range, stop buying at the top of the range, and take reasonable trades. Okay, give me a few minutes, and I'm going to be back. I'll do the end-of-day review, and then we will chat about some questions for a little bit. So, fun day, interesting day overall. Every chart's interesting. There's always something, I feel like I say like every day. You can always learn something from a chart. You just have to really think about it. And, that's really the whole secret to trading is the more you think about a principle, you take something that Al says, you think about some of the things Al Lee says, for those of you that went to the workshop. And if you sit there and just really think for a long enough period of time, you start to draw conclusions about various subjects. Why do expanding triangles work? Why do contracting triangles work? Why is a triangle that's contracting a breakout mode? There's all sorts of logical reasons. And, what was interesting about today, I thought today's FOMC was really sort of boring. Everybody's hopeful that the FOMC is just going to lead to a really strong rally, up or down, really, some sort of big bar. But this is a really common occurrence for the FOMC, where you get a big bar. In this case, it was 2 legs down. So I thought that this bar 55, the first bar of FOMC, I thought there was it's kind of a little, hidden red light flashing saying, hey, this is probably going to reverse and go the opposite direction. And that's a pretty common. So what I'm saying, in other words, what I'm saying is it's very common for the market on the FOMC to reverse the initial direction. Same thing as when you get a gap on the open, 50% of the time, it reverses and goes the opposite direction. And then here, we had a bear breakout, failed to close below the low, and we started to reverse. However, trading range, second leg down. Many reasons for this to fail. Big gap down, but overall, kind of boring FOMC. And whenever I see these days, whenever I see these opens for the FOMC, it's a scalp. It's a buy 56, buy to close 55, or when you see 56, buy to close 56, buy a pullback at 56, scaling lower, and all the way up. When you see a big bull bar like this, parabolic wedge, but it's probably going to lead to a minor reversal. So look to buy a pullback. You can buy that low, you can buy lower, you get a second leg up. And eventually you start getting multiple pushes. And then what do you expect? Deeper pullbacks. Big doji bar, probably buyers below this bar. You buy that low, maybe you scale in, maybe you don't get filled. You buy here at the 61 low, maybe you set a target at the 55 close. I say a target, maybe you scale in at the 55 close. Bears who sold the close at 55, disappointed by this bar, disappointed by the pullback. They're getting out break even, bulls are buying. You get a big bull bar. But what do you see? But what do you notice about the big bull bar? Big stop entry in the middle of the trading range. That's a bad bar to buy. Therefore, big bar, big risk, probably sellers above. I didn't think this would happen, but that is just really, really common. It's really unfortunate and I know people do this because the amount of times I've done it, hundreds of times. It's just so unfortunate. Traders buy above this bar right here. They put a stop 1 tick below the bar, failing to realize it's a trading range. So what happens? They buy, they get stopped out here, and they're mad and frustrated. For one, they're trapped out of the trade. And even though it goes sideways for a couple of bars, it goes right back to their entry. The other thing that happens is not only, let's say they're trading 1 micro up all the way through here. Well, this bar alone is about 14, let's say 13 points. So it's a big bar. So a trader just gave up 13 points trading 1 micro when the other trades, maybe at best, they're buying this close right here. That's 10 points. So if a trader bought here and, if they bought this close, put a stop below, let's see if they made a measured move. The reason I'm bringing this up is, like right here, if you bought, you barely made a measured move up. So let's say you made 15 points on that trade. Well, if you bought here, you just lost 90% of what you made 15 points here. And I don't know if it's 15 points, I'm just making a generality. You lost 13 points here, and now you're up 2 points on the day. So the point is, tight trading ranges are always trying to get you to buy high in the range with stop entries and sell low in the range with stop entries. And that's the worst thing to do. So when you see this, don't do that. You got to understand, it's a trading range. And all these big bars, they're just buy and sell vacuums. And on smaller time frames, they're spiking channels, like what I'll do pretty regularly in this, especially if I'm not talking. If I can just sit there and look at the chart, I might look at a 100-second chart, and as this bar is going down, sell it. As this bar is reversing up, buy it. And I hesitate discussing this because I don't want someone to get the wrong impression. But you will have traders, wedge bottom, 1, 2, 3, failed breakout below the wedge, exhaustion. They'll buy as it reverses up, betting that, and then, maybe consecutive bull bars, buy the close stop below. Then they see a climactic bar, small second leg up. Guess what they're doing? They're selling 2 legs up in a trading range, testing prior resistance where the bulls failed earlier. Went a little bit higher, channeled, and then ended up obviously going a long ways. Big bear bar, they're selling it. Sell the close, sell the close, sell the close, even sell this close if you can scale in. And then what do they do down here? They reduce their position, and then they exit. The market goes sideways for several bars, and then it obviously turns back up. That's why it's important to realize that markets are fractal. They work the same on all time frames. One of my favorite things to do is, as you know, is make charts. And I always, anything that's interesting to me, and I want to make it bigger, the collection. It's kind of like my own personal encyclopedia. But one of the things I try to do is I try to find other markets of just random things, and a lot of it, it's E-mini, the SPY. Here's Tesla. And I don't even remember what this was. So trapped the bulls, created resistance later. So you had a rally here on the prior day and an immediate reversal down, trapping a lot of bulls who were long. First reversal up, probably going to fail. Well, look what happened on the next day. We had a spike down channel. We gapped up. We rallied on the first bar, tested the low of the bar where traders were buying, that zone. Some bulls bought here, some bought here. Then we immediately reversed down. Context on a higher time frame. We had a triangle. We tried to break the downside. Arguably, you can say this wasn't a successful breakout. We broke to the upside. It's a buy climax. Buy climax late in a rally after here. Rallied from the low of 1 to the high up here, sideways for 30, 40 bars, small second leg, so it's exhaustion. You have apex of a triangle. Odds are you're going to retest it. We're retesting it, but it's pretty strong retest, so we're probably going to get a second leg. I do that kind of stuff all the time. It's really important to try and find pattern, understand pattern recognition. Big bull bar, follow through, bears, it's kind of a market maker fade. And Ali talks a lot about that. But the logic, Al, he says the same thing. You have traders who sell the high of a bar, disappointed by the follow through. If you're a bear, you sold this high and you scaled in, what are you going to do on a retest? You're going to buy back your shorts. What are the bulls going to do? Bulls are going to buy. You have some bulls who didn't buy here. They saw the follow through, consecutive bull bars with an inside bar, and they buy. You have an inside bar right here, high 1. Most high 1s pull back. Every inside bar is a high 1. It's triangle. When you have a micro channel and an inside bar, just because it pulls back doesn't mean you should sell it. So what traders do instead is they don't sell the high 1. They buy it. They buy a bar range below. So when the market goes down, they buy. They buy the test of the breakout point. Here, broke out above that high. What do? They buy the test of the breakout point. So anyways, if you want to get good at trading and understand trading, you have to spend a lot of time thinking about charts. Daily chart. We got a second leg. Well, let's go to the ES.D. I look at the Globex all the time, by the way. And I don't really have a preference. Some mornings, there's plenty of mornings where I will just trade, before I get onto the daily chart. Plenty of mornings where I will just trade the Globex. I'll just trade this chart. I did that today. Really big bar, and then we had a bear bar. I don't remember what I did. I bought a pullback. We had an inside bar here, and as this bar went down, I just hit buy the market. my thought was it's not going to plunge down. And so if I buy here, put a stop somewhere down here, you know, I should make at least 1 times my initial risk. And I got out at the height of the bar. And I had some computer issues. I bought once on a pullback in here, scalped out. And I took a lot of limit order trades through here. Yeah, I don't really exactly remember what I did, but basically the logic, 1, 2 legs down, you know, I don't remember if I bought here and scaled in or if I bought the low, but I do remember buying and then scalping out. But the point is, this is pretty much the chart I traded. And it's obviously not a day-only chart. It's just the Globex. We have a big bar, so it's a gap up. Again, it goes right back to markets are fractal. Doesn't matter what chart you trade. So the daily chart yesterday, we sold off, testing yesterday's low, and rallied for the rest of the day. And it was a good bar for the bulls. Strong enough rally, I thought we would go at least a little bit higher. And primarily, the reason I thought we'd go higher is this bar right here, June 5th. It's a surprise. We gapped up, bull breakout, a little bit of a bear flag. Probably going to get at least a small second leg. We have the second leg. We also had 4,000, not far above, and we're at 4,000. So what do we expect here? What we expect is, my expectation is disappointment. We already have a little bit of disappointment here. The market rallied, and we formed a doji. Does that look like the start of a strong rally? Think about it like this. Are you happy about this bar? It's a good bar. But when I look at this bar right here, what I really think about is, yeah, it's good for the bulls, but I don't know, maybe it's exhaustion. You know, it's got a pretty big tail above the bar, and it's a little bit climactic. Probably going to pull back. So the one thing I want to see is follow through. What's tomorrow going to look like? I suspect tomorrow is probably not going to look like today, and therefore it's going to disappoint traders. You know, it's interesting. We basically closed. Even though we're closing right at the open of the day, we gapped up so far that the bulls is still mission accomplished for the bulls. The bulls still got a good bar on the daily chart, but if you include the gap is a breakout. However, the problem here is it's a little bit disappointing. The bears, what do the bears need? The bears want this right here. Sideways trading. We want the market to go sideways and fail to successfully break out above 5,400. Successfully break out above 5,400. So what do I think? What's my expectation? My expectation is sideways trading tomorrow and disappointment. I'm going to look at crude oil for a minute. Yeah, it's not enabled. Never mind. Great British Pound, by the way, had a side topic, really big bull bar. And strong enough surprise, but late in a rally, big bull bar. Whenever you get a big bull bar, they're a little bit dangerous to buy. And if you buy it and the market goes sideways in here, a lot of traders start buying back their shorts or start selling out of longs. Breakout point here, and then look what happened. That's strong enough that we may get a small second leg down. You can see daily chart. That is not good for the bulls. We had a bull breakout channel. We rallied really close to, this is almost an encyclopedia or PowerPoint slide worthy. We had a buy the close rally and consecutive sell climaxes, trapped bulls. If you bought up here in March the 8th, well, look what happened. Today is June the 12th, and the close of this bar is 28.13. High of this bar is 28. That cannot be right. Close of this bar is 28.59. High of this bar, 28.60. So the market went 1 pip above this high close and reversed down. I have to make a screenshot of that. I do this all the time. Just take a screenshot, just add a chart, paste it. Just make a quick comment. Test of high close. And then I'll just mark it up later. That is basically how I find patterns. Whenever I find something interesting, I just mark it up. So anyways, 5-minute chart. Coming into the day, we had a really big gap up, and my thoughts were the first reversal down on the open was probably going to fail. So I thought probably buyers below, scaling in lower. Bar 2, bull bar closing on its high, far from the moving average. You can take the buy for a swing, but bear bar and then a bull bar, it's really not a fantastic buy. As far as selling, I'd rather wait and see more selling pressure develop. 3, big bull bar, a little bit climactic, but consecutive bull bars, probably buy the close and going at least a little bit higher. 4, smaller bull bar, so probably going to pull back soon, but I suspect buyers below 4, buyers at the midpoint of 3, scaling in lower. And then 5, you can see disappointed traders. I'm just curious, bulls who bought above 32 even, 32 and a quarter. So if they bought here, if they wanted to make 10 points, it needed to go to 42 and a half, and the high of this bar was 43 even. So it went up 10 points and then pulled back. Bar 6, bull bar. Why do we get a bull bar? Because no one's going to sell the close of 6. No one's going to sell the close of 5 after 3 consecutive bull bars, probably buyers below. But 6 is disappointing, so we may start to go sideways. Buy the close bulls, bought the close of 3, bought the close of 4, disappointed with 5, and probably going to go sideways. 7, bull bar, probably. I mean, the reality is traders buying, scaling in, they're going to make money. But overall here, I'd rather look to buy a pullback. Bear bar, 8. What about selling below 8? I would not. Probably buyers below. And because of that, you will have traders buying below bars, betting that we're going to rally. 9, outside up, good for the bulls. Bull breakout of a possible small bull flag or tight trading range right here. Second leg up from 1, 2, 3, and 4. 10, followed through after 9, but bear bars and getting to be parabolic. One of the issues I have, whenever you get a big gap up, the further the move goes, the more resistant I become to buying because I want to see a pullback to the moving average. That doesn't mean I'm going to sell, like I'm not going to sell right here. However, it does make me a lot less interested in holding on to trades. So if I'm buying, I'm scalping out. 11, another bull bar, but body getting smaller, not ideal for the bulls. And then 12, a strong breakout bar. But what do you notice about the bar? It's a big bar. It's climactic. You buy above 4. Let's just out of curiosity. So your entry is 32 and a quarter. So you need 52 and a quarter plus 1 tick to make a profit. And you can see it went up to 53. So the bulls who bought above 2, they've made 20 points. So lots of reasons for the market to pull back from this bar right here. Or at 55. Anyways. 13, pulled back from 12. You can call it consecutive buy climaxes, but the reality is when you get a buy climax like 12, the expectation is a pullback and a trading range. Pullback and sideways, not reversal. 14, bear bar, always in bulls, probably okay to exit. A little bit of a micro double top. We went up on 12 and then down on 13, up on 13, down on 14, but minor reversal. 15, good bar for the bears, consecutive bear bars. Second leg down likely. Would I sell to close at 15? No. Second leg down likely means the first reversal up is probably going to be minor and lead to a second leg. But that doesn't mean I want to sell closes. Risk reward's bad. If I'm selling down here, stop up here. I'm probably not going down here, and therefore I don't want to take that trade. 16, a bull bar. Bulls who bought the low of 13 or the low of 14, disappointed with 15. What might they do on 16? It's reasonable for them to exit their longs, whether or not they scaled in lower. Bears know that. Bears see it as a 50% pullback, high of 16, high of 14, low of 15. Therefore, they're going to sell. And then 17, we sold off. Good for the bears. Probably going at least a little bit lower. May test the 9 low. and we didn't quite test it. 18, a bull bar, reversal up. We had consecutive bear bars, 14, 15, bull bar 16, bear bar 17, now bull bar on 18. So every time we get a bear breakout, we get bad follow through. Because we're in a bull trend and we're holding above the moving average, I'm thinking about always in. And we're always in long. I said 14 is a minor reversal. And because of that, since 14 is a minor reversal, what am I going to do? I'm going to look to buy back my, I'm counting legs. And if I sold below 14, which I did not, I'm not going to hold above a second or third leg down. So we have 2 legs down below 14 after 18. Therefore, I'm exiting shorts. And I think bears, it's reasonable to exit shorts. And because of that, I think it's reasonable for bulls to start buying, although we may have to get to the moving average. Disappointment bar, 19. Some of the bulls who bought above 18, disappointed with 19. They'll look to exit at their original entry, the 18 high, and look to buy again lower. Other traders use a wide stop and just scale in. Another bull bar on 20, but not ideal, so probably going to go sideways. And then we got a second leg down, 21. 21, not a good sell to close, probably buyers below. Possible wedge, 15, 18, and then the reversal up after 21. And obviously that's what happened with 22. So we have a wedge bottom here, here, and here. Failed breakout below the channel. Good reversal. Now, is 22 a high probability buy? It's an okay swing buy. It's not, I wouldn't say it's high probability. You're getting a lot of overlapping bars. And we had a spike, 14, 15, pull back on 16. So we may just test up to the 16 high and go sideways. So risk reward is really not all that ideal. And what do you notice about 22? There's 2 problems I see with 22, really 3. One is the bar's big, so the risk is big. It's forcing traders to buy relatively high. The second is this is not symmetrical. 15 and 18, that's 3 bars, and then 1, 2, 3, 4 bars. And whenever you have a wedge with not a lot of bars, the point here is closer than this one here. It lowers the probability. The other issue that's probably bigger and the most important is the moving average. We're so close to the moving average, and this rally is getting fairly weak. A lot of traders don't want to sell down here. A lot of traders don't want to buy above the moving average. They'd rather buy at the moving average. And therefore, that makes me think that 22 might be a trap. It might trap bulls into buying, having to buy more at the moving average. And disappointment 23, testing the middle, and we went above the 20 high. 20 is the third leg. 1, 2, and then leg 3. So the 20 high is the most recent lower high, the third leg. Reasonable to expect the market to go above it. And then we got a weak bull bar, probably buyers below, but we may go to the moving average. We found buyers below 23 for a second leg, but 24 is a high breakout pullback buy. So it's already 2 legs up, and that means there's sellers above 24. 25, bear bar, tight trading range. If you bought above 22 and it's going sideways, a lot of traders are going to get out. And that's what happened. What about buying right here, or 28? 28 is such a small signal bar. If you buy it, I mean, your risk is 2 points. And these bars are relatively big. So you know if you buy above 28, we're going to fall below 28. High probability we're going to fall below it. That doesn't mean you can sell above 28 for 2 points. It just means if you're buying 28, if I'm buying above 28, I'm not putting a stop 1 tick below it. And surprise, surprise, we went below 28 and reversed up. 29, outside bar, context makes sense to buy, but we may go lower. We may have to get down to the 6th low. 30, doji, overlapping, forming a tight trading range since 18, not ideal. 31, bear bar, and then we just started going sideways. 33, a bear bar closing on its low. For the bears to make it credible, always in short case or argument, I'd really like to see a strong breakout with follow through below the moving average. We're getting late in the day. When I say that, we're getting closer to the FOMC report. It'll be in about 2 hours, and traders are going to start thinking about whenever you get near bar 33, if 54 is the FOMC bar, if you're thinking about a swing trade, you got to think about duration of the trade. And if you wait, in other words, traders are going to be quick to manage the trade because they can't use wide stops, they can't scale in, If you're buying, you can't buy up here, use a wide stop and hold because the market may not get there before the FOMC report. And it's not wise to hold during the FOMC report. We basically just started trickling down, but we got bars below the moving average, 36, 37, 38. But that looks more like exhaustion and not the start of a strong bear breakout. So there's probably buyers in that general area. I mentioned the 6 low as a magnet. We're so close to it, we may have to get there. 39, good for the bulls. If you buy it, some traders might, but tight trading range, not ideal. Bad follow through. Make these bars bigger. Bad follow through. 40, probably buyers below, scaling in lower. But what do you notice? We rallied and pulled back on 37. We rallied on 39, pulling back. This could be a variation of 2 legs up. Leg 1, new low. Leg 2. Where leg 2 actually falls below leg 1 and rallies. Whenever you start an opposite leg, you've been channeling down. Usually, let's say we channeled up for the rest of the day, you would look down here and you could argue that the leg started here on a smaller time frame. It rallied here and then pulled back. You can go back to Al's channel videos in the first portion of the course, or the video course where he talks about channels, and find information on that. Bear bar on 41, but no surprise buyers in the next bar. 42, decent bull bar. Probably an okay swing buy, but tight trading range, not ideal. If I'm buying above 42, stop below 42. The only reason I'm buying is I'm hoping that we race up and test the 12 close before the report. And always in bears, probably exit. They either exit above 39, which I certainly would, or they exit 42. 43, decent bull bar, probably going higher, but still trading range. And then we got a bear bar, 44. For the bears, what do they see? They see a wedge. 3 pushes up and exhaustive buy climax, 42, 43. My only problem with that argument is 42 and 43 are pretty strong, and it's in the lower portion of a trading range. So we could test here. We could test the high of this right here. We could easily go up to the 12 close. So this is fairly low in the overall range. 45 breakout pullback buy, buyers below 44, but not a great buy above 45. And then a doji bar 46, doji 47. If I was long, I'm exiting at this point. For one, you're about 30 minutes away from the FOMC report. Really not ideal to be long. And then 48, we reversed down. We tested near the 23 high, reversed down on 48. Can you sell below 48? It's a strong enough bar that always in bulls are going to exit. We'll probably get a couple of legs sideways to down, but we're so close to that report bar, I just can't do anything here. But if it was a normal day, it's probably an okay sell below 48. 49, strong bar, and testing lower. But what happened here? Whenever you have a lot of tails below bars, and you can draw a channel, traders start thinking about trend lines. We have a high, lower high, low, lower low, lower low. Bears want to bear a trend. Every time we went to a new low, we found buyers. We broke below. Remember what I said about 6? We had a spike and a pullback with 7, and pullback with 5, low of 6, and we rallied. Well, look what happened. We tested the bottom of the channel right here, so the start of the trading range. And then 51, second leg down after 49. Bulls who bought the 48 low, scaling in, disappointed, getting out break even, got a second leg. As far as selling 51, no way. I'd need a stronger breakout. 52, bull bar. I think it's reasonable for bears to exit above 52. Second failed breakout below the 6 low or the 38 low. Bears who sold to close at 51, disappointed 52. They got out break even on the retest of 51 during 53, and the market reversed up. Bulls who bought the low one on 50, this bull bar here, scaled in lower. They made money. And then bear bar 54, implied low 2 or double top here and here, or we sold off, pulled back, sold off again. So low 1 at the low of 52, rallied, low 2, 54. But decent consecutive bull bars at the bottom of a trading range, probably buyers below 54. And obviously, this was the report bar, so we went quite a bit lower. Big bar on 55, but 2 legs down, leg 1, pullback, leg 2, leg 1, pullback, leg 2, with the second leg being nested. And then look at the tail. Do you really want to sell that? Not really. That's the if I did sell it, and then you see that bar, it's best to just get out anywhere. And that's why I generally would never sell the first FOMC bar. 58, reversal up from 55, but probably sellers above scaling and higher. You have some bulls who bought the low of 51 and more lower, getting out break even. You have bears selling up here, hoping for another leg down. Low 1 short 57, buyers below, and we didn't trigger it. We broke to the upside 58. Strong enough rally, probably buyers below. But tail 56, tail 57, tail 58. Middle of an overall trading range environment makes me think that the pullback could be deeper than what traders want. Bear bar 59, probably buyers below and at least a little bit higher. And then we rallied on 60, and then no surprise, bears who sold 59, scaling and higher, they made money. Bulls who bought the low of 59, they made money. Testing areas where traders got trapped, low of 47, low of 48. Bulls bought more lower, made money. Probably buyers below 61, but we could have a deep pullback. We could fall below 58, fall below 55. Outside up, probably sellers above. Let me get a sip of water. And then we found sellers above 62, sold off below 63, buyers below, and we pretty much just went sideways for the rest of the day. Down here, bulls are buying, scaling in, and then 2 legs up. What do bears do? Bears start selling. So that's really the dangers. I talked about this earlier. Traders don't sell down here. They sell as the market's reversing down, and they like to buy down here. Bulls, they don't buy up here. They buy pullbacks. If they buy as it's going up, they scalp out on a second leg. Inside bar, consecutive bull bars, very common for the market to retest the inside bar, 68. And then when you see 71, odds are you're going at least a little bit lower. But I drew this line here, and the reason I drew it is because I wanted to mention that we're probably going to test it. Bulls who bought the 71 low and more lower, getting out, break even. Stop entries. You can buy above 2, always in long, maybe on above 3, and then the bears, they probably get out on 14. If they do, they buy back. The bears, they sell below 14. Bulls can get out. They do get out. Bears buy back shorts above 18 or 22. Bulls, they can buy 18, but they're probably better off using a wide stop, same with 22. And then we're really not ideal for swing trading here. If I bought here and we started to go sideways, I'd probably just get out. That's pretty much what traders did. High 45.25, so your entry price is 45.5. Look right here, 45.5, 45, 45. You had one chance to get out here if you were disappointed with 23, 24, 25. And then, maybe bulls buy 39 or 42. Bears certainly get out. And then the bears sell 48. Bulls, they get out below 48. And then bears, they probably buy back shorts above 52. In theory, bulls buy, but if they do, they get out below 54. This sell-off strong enough that we'll probably get a second leg, and it's really the report anyway. 54 is actually it's technically a low 1, but it's a bad low 1. And the reason it's a bad low 1 is we already had a reversal attempt. Bears, the reason why low 1s typically get pullbacks is when you have a sell-off like 51 and the market pulls back 52, usually there's buyers on a retest, and that's what leads to higher prices. That already happened. So here, we've already tested the break-even bears. Bears who sold 51, disappointed 52, they're already getting out break-even. So there's less of a need for this to have buyers below. That's why overlap's dangerous. You look at 53, it's easy to look at that as a good bar for the bulls, but it's really not. And then bears, they get out above 58. Bulls, they can start buying, and then really a mess in here. I would not buy above 62. I would not sell down here. 66, I wouldn't. I think it's best for most traders just to step aside. Bars are really big, and it's a limit order market. So really not ideal. let me take a look at, well, first let me do limit orders and buy the close, sell the close, then I'll talk questions. Limit orders, buyers below 4, buyers below 14, and really sellers up here, although you'd have to sell the close, buyers below, really buyers below anything. And as far as selling, I think it's okay to sell 2 or 3 legs up, sell above 46, 47, but pretty late in the day, probably better to be flat. And then over here, I thought buyers below 59. I thought sellers above bars. I thought buyers below 62, 63, 64. I thought sellers above 68, but the sellers are probably a bar range above. Therefore, really what I'm more interested in is if I'm long, I want to exit somewhere as the market's going higher because we're probably going to test the inside bar. And probably buyers below 74, but too late in the day, and I'd let all this go. Buy the close, sell the close, probably buy the close 3, buy the close 4, even buy the close 5. And as far as sell the close in here, maybe sell the close 16, but really kind of tough to manage. It's parabolic, so that's the one thing going for the bears, a little bit of a parabolic wedge. So it's logical to sell the 16 close for a second leg. And, really all of this is opposite. Big bear bar, buy it. Bull bar, wait for a second leg, sell it. Big bear bar, wait for a second leg down, buy it. Consecutive bull bars, buy the close, buy a pullback for a small second leg up. Big bear bar, you probably sell that close if you're quick to make decisions, and then you get out somewhere down here. Let me take a look at questions. All right, question, can you review the context? Can you review what context helped you sell during 71 instead of being fearful of a bull micro channel? 65 to 70? Yeah, it's a bull micro channel, but you got to understand overlap. There's a difference between a bull micro channel such as 65 to 70 and a bull micro channel like this over here. If I can get on the right, there we go. This micro channel is much different than this micro channel. What you're asking is, what made you not fearful of selling this? Do you really want to buy up here? When you look at these bars, does that look like it's that strong? Or do you look at this and say, yeah, it's a spiking channel, and we're probably going to pull back to the moving average? That's the logic of this. When you get overlapping bars are not good for breakouts. Climactic bars like 3, not good for breakouts, especially when you get a lot of overlap on the following bars. So that was my logic. What were your entries today? I would have to, let me talk about a 5-minute chart. I bought, let me see something here. So what were some of my trades? I mentioned that I bought on the Globex chart over here. I basically bought, let me just pull 5 minutes easier. I bought a pullback during this day. I basically bought the close of this bar just a few bars later. I wanted to make sure the follow through wasn't going to be a big bear bar. And then I got out somewhere here. And the next trade was here. I started having a lot of trade issues with my Z book, so I decided to reset everything. I took a trade in here, scalped out, and I sold a pullback of 16, scalped out. I know I bought a couple of times in here, and what I do pretty regularly is a lot of times I'll just pull up a 100-second chart, especially if there's a bias to the day. Let me just do 2 minutes easier, and I can load all the bars. So like through here, what I'll do, we've had consecutive buy climaxes, the bull trend. I'll look for several legs down. So 1, 2, 3 legs down. I'll look to buy something like that for a scalp, and then, either, start buying below bars, scaling in, scalp out, and if we're getting near the bottom of the range and we've had several legs down, look to buy a pullback for a bounce. I'll do that pretty regularly. And I bought a couple of times in here. I think I bought below there for a scalp. I bought high on this. I bought as this bar was going down and just basically concluded its trading range. Just used a wide stop, scaled it lower, got out somewhere up here, and then I sold as this bar went down and got out somewhere in here. But I'm sure I'm missing one or two other things. Okay, question. I took a scalp above 66 and took some profit just under the previous high of the day and left a runner. Should I move my stop to break even? Okay, let me back up. So I took a scalp above 66. I'm going to assume you bought the close of 66. That's reasonable. And they took some profits just under the previous high of day and left a runner. I'm not sure what you mean there, but I'm going to assume that you just basically scalped out and you held a runner. Should you have moved your stop? Oh, okay, I see. They bought here, they scalped out, and they held onto a runner. And the next question is, should they move their stop to break even, the close of 66, or kept it below the 55 low? Or 65 here and be ready to get out when 71 happened? Well, this goes back to context. Traders, if you think about it, if you buy here, let's do this. What you're basically saying is you have to think about your selling to exit a long is the same thing as going short. Buying back a short is the same thing as buying to go long. And that's the problem with trading ranges. If you exit here at the 65 low, what do you think is going to happen? There's buyers. And the other issue is risk. Traders that are buying up here, there's zero chance I'm putting a stop down here. Why? Because I need to be out of the trade far before that happens. Here, I said I made a mistake and I bought during this bar right here. I had a wide stop, somewhere down here. So I know I'm being kind of hypocritical in what I'm saying. The difference is I was not going to let that get hit. And I was using a wide stop, but basically what I was prepared to buy down here and use the wide stop. And then if we successfully broke out below the range, I'd get out. That's the problem here. Well, most traders, if I'm long up here and I see this bar racing down, I'm just hitting close the trade. And if I can, I'm going to hit reverse short. And the reason for that is that you're going to get a second leg down. So this is fairly strong. But overall, I think most traders, with it being 2 legs up, I'd get out a couple of points, maybe 3 or 4 points below any bar. Someone said they typically take partial profits and they leave a runner. And they recently started testing out adding to winning trades, and they concluded it can turn really bad. Yeah, well, if you add to a winner in a trading range, you're going to buy at the top of the range or sell at the bottom. Traders add to winning trades in strong trends. So that's why you have to understand what a strong trend is. This, great time to add to a winning trade. Terrible time to sell into a winning trade or buy into a winning trade. Great time to sell and build up a position. Far below the moving average, odds are first reversal down is going to fail. Terrible time to buy into a winning position, probably going to get a reversal. So the key, you have to understand what is major and what is minor. Okay, so where do we go tomorrow? I think tomorrow is going to be disappointing for the bulls. It's not a great start bar to sell below. There's probably buyers below, but I think the Bears have a shot at getting that follow through and creating a disappointment bar for the bulls, but we'll see. Okay, thanks everybody for watching, and I will talk to everybody soon.